Hello, hello, everyone. Give me 1 second, please. Good morning. Just get the link. Give me 1 second. I'm going to play this video and I'll do the intro.
Growth in the new year. On the other hand, inflation and labor market risks are still hanging around. Joining us now on what we can expect for the economy in 2026, Daniel Horning. He's former deputy director of the National Economic Council under President Biden, and Doug Holtz-Eakin. He is American Action Forum president. Welcome to you both. So Doug, let's start with that setup. I mean, we have some tailwinds for demand, both on the consumer side through the tax policies as well as this corporate investment boom. I guess the question is, are we going to still see this disconnect between GDP and job growth as an initial question?
Yeah, that's a big mystery right now. The third quarter is all productivity. The labor input is flat. We haven't seen any growth in hours, and the top line number is real big. So I don't see how that continues, to be honest. One of the things that hasn't been discussed as much about that report is the growth of real disposable income was zero. And so I don't see how we continue to get the consumer spending that we saw in the third quarter report through the fourth quarter and into next year. So I expect things to flatten out, quite frankly, in the fourth quarter. And then you're right, early next year we'll start to see the refund season, a lot of cash into the household sector, cash into the small business sector, which is really struggling as well. And I see, the second half of 2026 is going to be pretty strong. But between now and then, it's going to slow down a bit.
And then, Daniel, on the inflation side, on one hand, inflation readings have been somewhat stubborn, a little closer to 3% than 2%. On the other, that's not that out of whack with the long-term history of how inflation runs. And markets themselves have shown very little concern about a longer-term inflation problem. So how do you think that plays next year?
Well, I think where we were at this time last year was forecasters broadly thought inflation was going to go back to around 2% by this point. Instead, I think when we get
everybody.
The data that's delayed
Good morning, Edison. Good morning, Kevin.
As you noted,
good morning, everyone in the YouTube chat. Good morning, Francisco. Good morning, Buddha. Good morning, Force. Good morning, Scott. Good morning, Joseph. Mel's.
Again,
Oscar.
Forecasters looking
good morning,
at
everyone else
inflation
coming
to come
in.
down back to around 2% over the course of this year. My sense is
today
that
is December
both
30th, 2025.
Of some
this is BESTSPY live trading. What we do on the channel
we're
is
likely to see
best analyze the intraday stock
jumping
market
around
using
in that
cyclical
average
analysis,
effective
time
tariff rate
confirmation,
with
fundamental
litigation and
analysis,
the administration
technical
trying
analysis,
to
and more
build
to find the wind direction, trend directions, and the traps.
I think we might
Time
see a
is
slower move to
9:26 on the
2%
board,
than
and the
some are
market is opening
forecasting.
in
But
6
I
minutes.
think the
What we
direction
have
of
on
travel clearly
IWM
is
is that
lower on
2-hour
inflation,
MACD is
and we
trying
could,
to
over the course of this year, see both, I think, the American public, but the Federal Reserve too, become more focused on some of what Doug was getting at, things like slowing real income growth, and then, of course, unemployment.
I have no idea.
What would that look like,
QQQ and SPY is looking a little
Doug,
bit
in terms
weak.
of getting more focused on that? I mean, obviously, for the Fed, it would be a
we
further
are
easing
above the
bias,
4 p.m.
but
close on
Tesla.
We are at the 9:30 open on QQQ.
Well, I think they've pulled the levers on the fiscal
disclaimer.
side, quite frankly. And
please consult your personal financial advisor before you make any decisions regarding your personal financial situation. I am not a financial advisor. I do not recommend that you buy or sell any securities or investments, and this video is for information and educational purposes only.
It's really unwise and something that they're going to have to take care of. And we have a looming bankruptcy in Social Security, so there's a real reason to move on one of the big entitlement programs. So they ought to start, getting ready to take care of the fiscal outlook. That's
we have
that's
a gap
the right
below
thing
on the 1-minute chart
to do for both the economy
SPX
and for the budget.
And QQQ.
I think the spring's going to be a tough
from the
patch,
previous Tuesday last week.
I'm less optimistic than others on the
we
inflation coming down to
today.
too quickly.
We are playing
it's been pretty stubborn and was really headed north, not south, at the end of this year. So the Fed's not going to have a big easing bias, and we're going to have a slowing economy, and it's going to be a sort of stagflation feel early in the year.
1-minute gap versus
that's never a good thing in an election year. So I'm a little worried about what the spring looks like.
Gap is up there, actually. At 6,926. It is possible we may push up today or tomorrow and fill it. Gaps do fill faster rather than not, but it is totally up to the 2-hour on IWM, RSI. If you look at QQQ and SPY, it does not look like IWM right now. It looks a little bit weaker. So, we'll see, man. What does this say?
All right, let's bring in our first guest. That's going to be Kevin Green, Senior Markets Correspondent here. Going to join us to help us set up the action today. Another quiet day of consolidation here, KG, in markets. What are your expectations for the day?
Okay, market is opening. There's a gap down there on Tesla that it wants to maybe fill as well. I am. Hey. Alright, I'm out. I left my 2 SPX puts. I left my 2 Teslas, and I'm leaving all my SPYs right now. What am I saying? I left on everything just now. IWM. Let's see what the hell happens here. Tesla and SPY, I just left everything. I don't care what they do right now. $6.89 from yesterday. I'm gonna let them create a cycle and then see again. Just $500 on SPY and Tesla. I did not leave yesterday close, so honestly, basically same fucking profit from yesterday. But amazing. I was in 465 Teslas into Friday, and I did not leave. Man, market fighting. Gap is closing on QQQ. Let's see how SPX is opening. SPX is opening at 6,900 and pushed up to 6,906. Gap fill trying from today. That is a gap fill on Tesla. She wants to roll down again. Gap fill on Tesla. IWM. The 2-hour is not bouncing on IWM. 9:30 algo range trading. Time is 9:35 here in 20 seconds. SPY is rejecting what IWM, and QQQ wants to bounce. I have no idea what's making QQQ bounce. Maybe NVIDIA, maybe Google, maybe other things, but they are diverging. Good morning, everyone. Today is Tuesday. That's beautiful. That's sub one. That's like 1K profit, but I'm literally out. If they go on Tesla, they go on Tesla. But at this point, they went 4 days in a fucking row. So I mean, this has to be fucking Dr. Barry shit. Like 1, 2, 3, 4, 5, 6 days. This is like, I can't be more greedy than that. 6 days. It's amazing. I would have liked that to open down more and then open and go lower, sure. But I mean, wow. IWM is at the floor at 9:30. Let's see what happens. 930 bounced to 935, and 935 is rejection already on IWM. Bears are crazy on IWM trying to show. Holy, and now the wind direction is south. 930, 930, and 935. This could revert bear trap at 935. I'm just saying. Candles are not coming in on SPY like that. They faked out for 1-2 minutes, bull side again at market open, and they're going down. But they could fake this, you know, they could easily bear trap this shit at market open. So, I mean, morning cycle and at market open. So we'll see. WM. Breaking yesterday's low. We're testing yesterday's low. We'll have to see if that shit really breaks. I mean, this is the 0.618 and they just let go of that crazy. It looked like it was going to fly the pre-market and then it just let go of that shit crazy. SPX gap filled and then pushing lower. Tesla. Wow. Still bearish. QQQ at the roof. Time is 9:35. There's a divergence at the floor, at the roof. Things are super risky. This is pivot point trading. This is morning cycles trading, and also it's divergence trading. So it's three different things happening. Higher, smart money are thinking instead of, you know, just candle wise being like, oh, the MACD is bullish, MACD is bearish. The MACD is bullish on QQQ. The MACD is bearish on SPY. Your dog could tell you that. Color coding. But I mean, this isn't color coding. This isn't art class. So, I mean, it is what it is. But those people that try to sell bullshit on candle colors, you gotta watch out for, man. It's kind of crazy. Fucking fake. IWM. Not breaking yesterday's low. Right, now something different going on. We have a rejection on QQQ testing the floor. We have SPY trying to go lower. Is it bearish? Is it not? I don't know. It's showing. This is from yesterday's 3 p.m. top, right? I literally shorted at 3, and I thought I was going to get kind of washed out and go a little bit higher and then decide with the market, but I mean, the market literally used 315 as a trap into today, and that's the setup. They gap hope these people into today, and then they burning them now. They want to figure out what they want to do, and Tesla is going fucking lower. Tesla dropped $5, is breaking yesterday's low, so they want to go somewhere here, but I don't even care because I don't want it. If like once I'm starting, like this is the 3/3 at this point, like this was the 3/3, this was the 3/3, so I'm expecting a bounce at some point. It's been going down for 6 days, so I don't play in the 3/3, so I watch. And we'll see what happens on Tesla. Time is 3:40, 3:35 bounced at. Sorry, 9:35 bounced at 9:35, 9:35 algo range, and time is 9:40. So there's some sort of algo range happening here. It's not really bearish, it's not really bullish on IWM. SPY is bounced trying. QQQ did not break the floor. There's a lot of things going on. There's like 3 or 4 things going on. They're all different. So it's a lot of mini game, a lot of puzzles happening. Smart money understands everything. They're looking at it. They don't even give a fuck because they would rather let all the shit clear out. They'd rather let everything clear out. I'd rather have a wind directional momentum thing set up, and then they'll be okay. The setup was from here to there, so I don't know, man. I don't know. Market deciding. Market deciding. Not all moments are literally safe, and not moments are the best. Wow. IWM. SPY, no rejection. SPY rejection or what? It's all flying all over the place. Yeah, it's risky as hell. This is pivot point trading, floor testing, morning cycle. We could trap all bears here. There's probably a lot of bulls and bears all thinking on everything here. So at that point, I'll let it be. Just like yesterday. Why? Every day is the same. Cycles happen.
We're discussing
Bulls get
SoftBank's
involved, bears get
acquisition
involved,
of Digital Bridge, and I brought up OpenAI, of course, which we continue to focus on, which is in the market, it would seem, for raising as much as $100 billion. Perhaps at a valuation, according to reports, I haven't confirmed this, at $750 billion value for OpenAI, such an important company, but a private company, of course. Yesterday, I was sort of musing aloud, or at least questioning, saying, where was SoftBank in terms of the $40 billion last, let's call it March 31st, early April, when they said we're going to invest $40 billion in OpenAI. The pre-money valuation, $260 billion. And I cannot tell you, according to sources who are familiar with the situation, they funded the entire amount. $10 billion was syndicated. And then they had already invested another $8 billion or so, but my understanding now is about 22 or 22.5 billion was sent over last week, and so SoftBank has made good on its $40 billion.
I can't say this is the 3/3 though. This
Again, announced early last year. Let's call it right at the beginning of the second quarter of last year, at a $260 billion value. By the way, the money looks pretty good right now. It's going to take SoftBank's ownership north of 10%. Don't have the exact numbers for you. To put it in perspective, of course, the initial benefactor of OpenAI, Microsoft, under their new cap structure, will own or still owns around 27%.
QQQ pushing lower now, and IWM bounce trying, man.
A very significant owner of OpenAI, and again, has made good.
You gotta be careful. IWM could go way lower here. This shit is dangerous. Nobody knows where this shit's going to stop at this point.
And we talked about the fact that because OpenAI is not a public company, there are various ways to try to play it, so to speak, and SoftBank certainly has been one of them.
I literally said it in the pre-market.
The importance that company, that investment now has to SoftBank's future.
The 2-hour RSI is trying to hover or show bounce, but it could be released, or it could,
of data centers. Just yesterday,
I literally was going to say it's going to reload to go lower, but I mean, this shit
on Digital Bridge, on a data center company where leases are already in place, but conceivably it will allow them to have, future compute capacity as well. I know. I mean, I'm looking through my OpenAI file, which we were marking on before.
Which is very large.
Yes, it is. It's only getting bigger.
We don't have that much news today.
No, but more and more things get put in here. The debt, obviously, OpenAI is using to help fund it. Their $1.4 trillion of compute costs, let's call it, over the next 8 years that they've committed to at OpenAI.
I think this has to be maybe like target
in the market. Really,
from yesterday, 6,900 was a huge level
using
of gain
other balance sheets, and clearly,
how many
because
times?
you need Oracle's balance sheet, you need Microsoft's balance sheet, you need something, you need so many to do that. Obviously, you've got the Stargate project, kind of separate but related, being built as well for a lot. It will go on and on.
We might see a bunch of cycle in here. We might see some sort of time wasting. We might see some sort of consolidation. We might see a fall through. We might see a bounce. But I mean, until it happens, I ain't gonna say shit. That's not how it works. And until it breaks the low, I'm not gonna say this isn't a 3/3 bear cycle, because we're not. We are right now in a 1/3, 2/3 bullish cycle since Monday of 12:30, when we cleared a divergence on the live stream together, and then the market went higher at 12:30 into when 255, 310, right? And then since 310 yesterday, they're doing a 1/3, 2/3, 3/3 down into now. So I mean, what that tells us, cycle analysis says that we are literally 1/3, 2/3, 3/3 inside a 1/3, 2/3, 3/3 bullish cycle. Meaning, if this shit reverts up at some point without breaking the floor, then that means, we're continuing the cycle until who knows when. We could even test a tie here. Nobody knows if this is going to revert now or later, for 30 minutes, 4 hours later, right? But at some point, if it does, when it does, and how it does, that's how deductors know what's going on with the cycle analysis. They're basically playing in the 3/3. But they're also playing in the bullish 3/3 here too. You get what I'm saying? This is like risk times risk. This is like risk squared, if that makes sense. In my mind, there's things that, like, you get what I'm saying here? Cycle analysis tells me that I'm in a 3/3 bullish cycle. Cycle analysis tells me that I'm in a 3/3 bearish cycle. So they're about to decide whether to bounce or go lower or whatever the hell. So you know what smart money's doing? Smart money doesn't even fucking need this shit. If smart money thinks a bounce is gonna come, they wait until momentum comes and then they do it for like 2/3, right? Or some shit like that. If smart money wants to be a bear here, they wait until the fucking floor breaks and then they do it from here to here. That could be the trap itself too, but I mean, they don't like they think differently than just literally candle shit, if that makes sense. Because cycles going on and cycles are always changing. Cycles are always forming on top of each other. Let me get rid of this shit.
Time now for the word on Wall Street. Top investors watching your money. Joining me now, Barron's market reporter Jacob Sunshine.
Cycle,
also with
1/3, 2/3 bullish cycle, and there's a 1/3, 2/3, 3/3 bearish cycle inside the 3/3 bullish cycle.
Actually, the Dow just ticked up higher, 11 points. So I guess that was you joining us on set. Thank you.
Right. Yesterday we said in the pre-market we are playing in the 3/3 bear cycle, right? And today we are now playing in the.
All three major indices and the day lower yesterday. We had a little bit of a tech sell-off, but going into the year end, you kind of see that people are making portfolio moves before they close out their book for the year. Tech and AI did dominate the market for the year. The Nasdaq rallied nearly 22% this year. That outperformed both the Dow and the S&P 500.
What I'm showing right now is
global
true
semiconductor
smart money,
sales topping 400
true
billion in 2025.
risk analysis
Unbelievable.
based on
Chip makers
true
bracing
things
for
that
an
happen.
even bigger
So,
2026.
like,
Demand for computing power is surging,
please hit
and
the like
NVIDIA
button.
is now
No, I'm
facing
kidding, but
competition
seriously,
from
man.
Google
All the
and
shit
Amazon, even after they signed that $20 billion deal with Grok. Analysts are warning that long-term AI financing, power, and supply constraints are emerging as risks
I've actually
for the
done
year. I'll have
research
to
into
throw
them,
it
and
at
I've
you,
actually
Jacob, your
cared
reaction.
so much.
I was reading an interesting chart from Evercore, the strategist there last night, and he was saying that the percent of equities that corporations own versus households or money
Vanilla said, yeah, what happened to the Santa rally? Okay, we're just going to talk about how crazy fast they flipped the switch, right? They're going south, trying. Wind direction is now south. It broke on SPY. They're going south, all right? IWM's going south. Tesla is at the floor. They're going south, all right? They're going to go test maybe they're going to go test down here, and it's extending the 3/3 bear cycle from yesterday, 315. But exactly what Vanilla said. She said, oh, what happened to the Santa rally? But do you understand how fast things change, guys? Do you understand? This is the reason why understanding the cycle is so fucking important. Because why? We're playing in the 3/3. The volume's going lower. Prices are going higher. We break all-time highs. We make everybody bullish again. And we get a violent rejection again. You know how fucking insane that is? To people that are not looking at cycles, people that are not caring about roofs, people that are not caring about things, people that are not caring about setups, volume and shit like that. You know how fucking insane that is? It's insane because we rejected from the HOD violently once, twice, third. This is like the fourth time now. Like, this is the FOMC from December 12th, right? The realists remember. This is the FOMCs from October 29th. The realists remember. But I'm telling you, bro, it's crazy. Wind direction crazy south right now. Wind direction crazy south right now. I'm not chasing this shit. Time is 9:45. I'm up. I'm good with what happened with me yesterday and before into going into yesterday. So I honestly think I need to kind of chill, even though they might do some shit that is easy. Like, I'm just gonna straight up do some smart money shit, which is I don't give a fuck, and I'm gonna fucking only care about like safe shit. Like, dude, this thing, I don't know, man. It's violent. Oh my god. Oh my god. Nobody even knows why that candle came in, so man. Okay, actually I do know why. There's an algo range here. There's an algo range here. Why? Because we were gonna draw it, but things were going down so goddamn fast, right? We were getting distracted. This is dangerous for bears. This is dangerous for bulls too, right? Well, candle came in crazy hot, so another moment where smart money deductors got the setup they want or something, and now they're gonna let it form a cycle to decide what they want to do, while everyone else just gets used in, most likely. I'm speaking hypothetically. We are at POC. Oh my god, the POC is coming in. IWM bounce at 945 into 950. Standing as. Tesla did not break the 4 at 945 into 950 as well. Holy crap. That is so fast. This is literally why I did not want to chase. This is literally why I did not want to change, bro. That's crazy, though. That, look at how fast in 3 minutes. 1, 2, 3. I was expecting some sort of like hover at the minimum and then be bullish, but like that is crazy bullish. I don't know. That could either be a bear trap at 9:45 with the divergence, with the floor cleared, and then make everything bullish and go test here, which literally looks like it's doing right now. Holy fuck. Or this is the spike up, and then there's a bull trap here too, and then they bear trap, bull trap everybody, and then figure out what they want to do. This is holy shit bullish. 4 p.m. gap filled though. This is now setup done. Setup done in 5 minutes. 9:45. They trapped every bear at market open. Every bear from where yesterday. Setup and chasers 3/3 in fucking 3 minutes. Jesus Christ, that is so crazy. And then gap fill setup. So now this is bullish, but like I'm gonna say, the setup has played. That is insane. Just like how the setup has played to the downwards, setup has played to the upwards, and now this is a spike candle now. 9:45 to 9:50, crazy spike. HOD cleared. There was a divergence at the HOD too, so they cleared the floor divergence, they cleared the roof divergence in 5 minutes. And this is why. There was so much risk. There was divergence at the roof, there was divergence at the floor. There was 3/3 playing in the bullish cycle and the bearish cycle, and it's just crazy, man. Everybody thinking bull and bearish. That's why on candles. And cycle analysis says that's literally what would a most likely probability happen, and that's what the fuck happened. I'm outside watching this shit. I don't care, dude. I literally left Tesla at market open. I left SPY at market open. I don't care. I'm watching. I am okay with what they do. They're creating a cycle. That's what it is for me. So I'm actually okay with this. I'm happy with this.
Historically not.
This is what I said in the pre-market. I said, hey, IWM 2-hour MACD is trying to bounce up. We might hover or be bullish, but like I didn't expect this where IWM rejects lower and then SPY and QQQ makes a floor and then bounces and we're hovering, whatever the hell we're doing at the 4 p.m. now. But I mean, dude, I guess that's how they do it, right? I guess the probability I said was like 1 out of 5, but I mean, this is like the second or the third out of 5.
That moment is coming, and it doesn't mean.
In what regard, though? What is the slowdown? What is the cause of that?
Oh, yeah, because they have built out so much in the way of data centers to make sure that
I'm telling you, though, this move is so much more harder and violently than yesterday, though.
We're probably going to overinvest. They didn't say those words. They say we'd rather overinvest
or was it? Or I don't even know. But this is something,
and if that data center build-out slows down, then your revenue and earnings for chip makers and all that stuff gets hit.
Well, Maria's brought that up. It's ROI. You know,
I love it though. This is literally morning cycle, right? This is literally what I love to see. I'm not gonna lie. I'll go range and I was like, oh, I'm not chasing this to 3/3, and they bear trap the fuck out of that, and then the bulls print, and then this is now the 3/3, and the rejection triangle cycle is chopping and creating. Like I love that shit. I'm not gonna lie, bro. Like I love that shit. This is like market cycling at its finest, and this shit is what I mean by it proves to me in my head that, you know, things that I'm saying to myself mentally and the things that I've been doing and practicing is just literally, you know, it's right there. It's fucking beautiful.
A lot of these PE firms are in 2026, and they're still going through a huge backlog of unsold companies.
Something higher going on this shit. I don't even know if IWM wants to bounce or go lower, to be honest. Tesla doing something crazy next year. I don't know. I'm just watching. SPX, look at this shit. Testing the high of the downward trend line already.
That's a lot
from the Friday drop to the Monday high.
I do.
Already.
I think
that's
the deal
crazy.
Activity that we've seen this year,
somewhere up here, the 4 p.m. close was literally, I guess, right fucking there. I wanted to try, but I mean, that's so goddamn fast that I'm okay with just watching it out. Like, this is the 3/3 bullishness, you know?
I think a lot of these companies are really good. I think the private equity firms are very well managed.
Bulls coming crazy fast too, bro. Bears coming crazy fast too, but I'm not. That is so much faster than yesterday's little down. Like,
I think we're going to see an explosion.
And that little reload and down yesterday, in the morning, this is like 5 times faster.
Deregulation push even further going into 2026.
5 minutes.
I think the Trump administration is just
like
getting
at least
started.
the fucking yesterday shit was like 15,
Let's
10
take a look
minutes.
at yields
Like,
this morning. We're talking about these two major decisions coming up for next year. You've got the Supreme Court decision.
Realize what I'm saying here. Dangerous for bears, dangerous for bulls. Why? This is a spike candle from the LOD to the HOD, and they're creating a cycle, right? If they're truly bullish and the MACD is really gonna stay and the volume's really gonna stay bullish, then the pullback to test VWAP, the pullback to chop at algo range, and then to bounce and then to break the HOD would be the safest. That's just the most logical, smart money things to do and to say. Not to do, but I'm literally saying hypothetically that's what they would be seeing and doing off of candles. But the candles are so goddamn dangerous because the setup has played 1/3, 2/3, 3/3, and the setup has played 1/3, 2/3, 3/3 just in 5 minutes. So I can't even draw it, but I mean, at that point, I'm gonna let it be. Candles and the MACD and the RSI trying to be bullish, yes, but cycle time confirmation iffy as fuck.
And of course, who's going to be the next chairman of the Fed?
There's no confirmation rejection here. It's just
the Federal Reserve
iffy as fuck.
He'd love to fire Chair Jerome Powell, also signaling he's got a preferred candidate to lead the bank. The decision likely in
Why?
January.
Because one single candle can change everything. One single candle just changes the definition
again calling on Powell to resign,
of everything.
Pushing for a more aggressive approach on rates. And, you know, Jacob, the Wall Street Journal wrote this, how investors are preparing for a new Fed. And they say markets have shown few signs of significant concern that the Fed would completely surrender its independence. Still, though, they're bracing for a Fed next year.
HOD breaking on QQQ into 955.
You know, it's funny because if you bring in a new Fed chair that is
688.21,
that wants rates to be a little bit lower, that
maybe they're breaking out into 10.
In the near term forces the price of stocks lower. It forces them.
Why didn't they break the HOD by 1 cent on SPY though?
Stocks have to go. No. Right now, stocks have to go higher. But the long-term risk is that if you have a central bank that is only focused on lowering
HOD
rates
broke.
wherever you
Wind direction
possibly
is north.
can, you create the risk of bubbles. You create the
Wind
risk of inflation.
direction
in the
is
short
north.
Term, the market is forced upward.
Not north until it breaks the.
Yeah. No, and the journal pointed that out to the risk of inflation.
It is north.
Absolutely, and that's
breaking the HOD and running now.
It is a board. You know, it's not just one individual.
God,
it is a board.
Look at the MACD and RSI coming in crazy now. Oh my lord.
Your reaction to that?
Yeah, look, I think you said it best. It is a committee at the end of the day. I believe in central bank independence. I've said this on the show. I've written it publicly to clients. There are a lot of good candidates out there. My preferred candidate is Fed Governor Chris Waller, because I believe he understands the institution. He's been around there for a long time. There are a lot of great candidates out there, but this market really wants to see
is breaking out above the downward trend line.
View, that is somewhat independent. So if the president makes a decision, and he might, and he may be watching the show, if he makes a decision to put someone very close to him into that institution, I don't think that's going to be good for markets.
Yeah, well, again, the journal has a good...
And he may do that.
Oh, look at the volume actually going.
I don't think it's going to be good for markets in general.
No, I mean, the market will enjoy something that it knows is not good in the long term. That can happen.
Time is 10.
On many levels. So
I want to see how the roof cycle does.
It's great to see you. Happy New Year.
Happy New Year.
Yeah, thanks for being here.
Well, we're going to come back to news in a little bit. 10 a.m. HOD on QQQ2. Tesla. I hope it breaks the HOD and goes back into 469. But I mean, the market is showing too fast of a run for me to be in any sort of liking here. Man, look at the volume though. Something cool going on. I mean, there's 1/3, 2/3, 3/3 bear cycle setup happened, and then now it's 1/3, 2/3, 3/3 bull cycle setup happening. So, ain't gonna lie, it's kind of doing both sides. All right, just one from yesterday close into market open, and the one from down at 9:45, 3/3 into past 4 p.m. close, and then yeah. This is like the best cycling, basically, what the market wants to do. I think market doing this too because all participants in the markets are wanting to do this. I mean, I'm pretty sure, you know, everyone in the world looking at this shit and this shit going down and fucking gap fill, they're doing it all. They're not really doing anything up or down yet. They're just right at the middle. Four p.m. close. All right, we're gonna mark that on SPY. I think might be an important level today. So, holy crap! Just because I draw this cycle does not mean it's gonna stop. But I mean, we will start now drawing cycles 1/3, 2/3, 3/3 until the low or the floor of 945 breaks. I'm not really gonna call anything bearish here until the roof of 955 rips off and then it flies. I'm not gonna say this is bullish here. Cycles are creating. That's all it is. Setups have happened. So we have a rejection off of 9:55. We have a rejection off of 10 a.m. 1/3, 2/3, 3/3, cook it. But this is still playing inside the 3/3 bullish cycle. If you look at it in the higher time frame, this is still playing inside the bearish cycle. If you look at the higher time frame, it's actually even more riskier. So we'll see what happens, folks. Holy shit. Didn't it look bullish as hell 5 minutes ago? What the fuck? And now it looks bearish as a motherfucker. It's fucking crazy. It's insane, man. Good morning, Shakima, Gifford, and B. Turner. Everybody, good morning, alright? Everybody talking about stuff in the YouTube chat. Thank you very much. Let's get active. Alright, let's get our minds opened up. A lot of move already, right? I'm in a SPY put now. 689.
You know, a stat that stood out to me, it was another tough year, and you follow this too, for active managers. So around $1 trillion was pulled from active equity mutual funds over the year. 11th year in a row, we have seen net outflows, while no surprise, passive investing, ETFs, $600 billion went into there. It just shows how hard it is for these active mutual fund managers to keep up with the indexes with such concentration high around some of these big names.
Without a doubt. Mike, you know, when it comes to active management, where are we on actively managed ETFs? Is that compared to actively managed mutual funds? I'm just sort of, it's not an area I focus that much on, so I don't know the performance metrics and the like.
It's been a booming area because basically every traditional long-only manager with active funds has at least tried to create, or most of them have tried to create, just an ETF structure, which really doesn't solve the stock picking problem, but it does make for a more tax-efficient, lower-cost way of accessing that stock picking.
MACD turning bearish, trying on the one. Let's see if we get some follow through. All right, bears are trying here.
Let's stay on semiconductors, of course, as well. Biggest gainers of the year, outperforming some of the hyperscalers, in fact, in the so-called AI trade. NVIDIA, Broadcom, AMD, Intel, all of them up more than 40% year to date. Joining us to talk about what we saw and really more what we can expect in 2026 is Stacy Rasgon. He's senior semiconductor analyst at Bernstein. Stacy, good to have you. Does it just keep going next year? The Journal writes a long story today, you know, talking about the various gating issues, whether it's lack of transformers for the power or memory. How do you see things evolving next year?
Yeah, I think it probably still goes. You know, it's funny, like our general call in 25, if I wanted to sum it up, was kind of own the high quality AI names, ignore most of the rest. And I guess you could have owned the lower quality AI names too, but I mean, AI was working pretty well. And I actually don't think it stops in 2026. You know, you can look at the forecasts that companies like NVIDIA or Broadcom have put out. You can look at where the sort of the current estimates are, and they're still way below that. I think there's still plenty of room for numbers to move higher. And even valuations like are not crazy for a lot of these names. NVIDIA, Broadcom, I mean, NVIDIA's in what the low 20s price to forward earnings for amazing growth. I understand all the worries about like peak spending and digestion cycles and everything else, but I mean, look, people have been worried about that since this started. And kind of look at where things are going. That clearly wasn't a problem in 25.
Come on, go, push.
At, like,
fuck,
the
1 minute.
Volumes are already there. It's probably not an issue for 2026.
Q.
And assuming OpenAI does execute on their commitments, and we'll see. But if that happens, it doesn't even start until the end of 26, that spending. So it may not even be 2027 either. I think this trade still has legs. I think so.
Yeah. So, all right, you and I may be having the same conversation a year from now.
Maybe.
I am curious, though, because we are going to be discussing more, the competition to the extent that NVIDIA faces any at all. But whether it's Alphabet's TPU, which certainly we've been talking a lot about of late, whether it's Broadcom trying to help OpenAI design its own chip, because you got to get cost per token per dollar per watt down over there versus your competitor Gemini. How do you see that evolving in 26?
Hell yeah.
So there's always competition. This is semiconductors, so it's on NVIDIA as well as on all these other players to make sure that they're moving their roadmaps along and keeping innovation going. And you know, I've said this I think on the show in the past, but I still think right now it's sort of, I understand the nervousness, the narrative swings back and forth, GPU, TPU, and back again. It's one reason we've advocated owning both NVIDIA and Broadcom. Like, you never know which way it's going to swing in any given moment.
What the candle?
I still think it's the wrong time to really worry about that in general. I think the right question asked today is still, is the
something crazy happening here too. Look at this shit. They're building a 1/3, 2/3, 3/3 small cycle off this shit again too. Something crazy going on.
If you think we are, like, there's a whole other set of questions you might want to ask, but in a world where things I think are still growing like massively,
POC below.
You know, if the opportunity is still big, then everybody thrives.
Really
and if it's not big, then everybody's screwed.
LOD testing now. LOD testing now.
I don't think we're at the point yet where I necessarily,
I'll go range
from
first.
a fundamental basis, have to worry about who's winning and losing. I would just own the space, frankly.
Testing. Top of the algo range is testing.
Let's start off with this. Yeah. Are you a believer in the Santa Claus rally? What do you make of the fact that we're pretty much flat over that period right now?
It's early. It's something my father invented back in 72 73 Almanac.
Where are you at?
Believing it as an indicator, yes. And the fact that the last 5 days of the year, the first of the new year, are a bullish periods when, not everyone's around. People are buying up stocks, making new lows and bargain stocks and stuff that was so
Santa Claus is here in Christmas.
So I'm a believer, but it's really an indicator. It's not just a rally to trade. It's something we need to look at. And if Santa Claus fails to call, bears may come to Broadmoor.
What is this? December 26th. This is Santa Claus.
That phrase back in 72.
I literally called out. This is a fucking early Santa rally, right? People are like, "Oh, Santa rally later," but nah, this shit is fucking. We already Santa rally.
Look at other indicators combined with our January barometer, which also was invented by Yale back in 72. And the first 5 days of the year gives us our January indicator trifecta. All three hit the first 5 days of the trading days of the year. The Santa Claus rally that you mentioned, which you got right, and the full month January barometer for the S&P is up 90.6% of the time, 29 to 32 years, for an average gain of 17.7%. So hitting the trifecta, pretty good for the market.
All right, so that's something to watch for. So we got to see if we get that Santa Claus rally first to get that trifecta.
A few days left.
All right, I want to talk to you about the full year of 2026.
Sure.
a lot of talk about the fact that there's no strategist out there who are bearish about next year. Everybody's bullish about it. A lot of talk about that. I want to hit you with something else. We had a guest yesterday that gave us a great stat. Second year of a presidential term, obviously. Next year is President Trump's second year. The average gain on the S&P is 3.3%. But you're looking at a different trend. The sixth year of a president's term. Even though obviously President Trump's terms are broken up between President Biden's presidency and in between, you're still looking at that trend of the 6 year. Now, what happens on a 6 year when it comes to the markets?
Well, the president's really trying to cement their legacy. It's kind of like a pre-election year of a regular term where they're really trying to push as much through as possible to make the
wow, they really want to fucking
to keep their party
if this
in power.
breaks on the 5 or 15,
you know,
and they want to go break.
That's pretty hands-on,
and there might be
interested in his legacy and how he's perceived, and I see that happening here. All of the worst-case scenario, fallout from the policies and tariffs have not materialized. Things are looking pretty well. Just look at GDP, look at the stock market. It's pretty robust. We made a couple more new highs here for the Dow in December. That's 20 this year. So it's one of those years where you're looking at somebody who's doesn't have to worry about getting reelected. They're just doing everything that they can to keep the market and the economy moving along.
You sound very bullish, but you say there's going to be a lot of volatility in Q2 and Q3. What's the cause in your mind? Is there a historical precedent to have that volatility in Q2 and Q3? And then what leads us to the rally in Q4? Because you're also calling for that. So what's the problem? How do we fix it? And how do we go higher?
Well, I mean, you've got your usual seasonal weakness during the weeks and months, the telomate period, the worst months of the year, May through October.
From 9:55 to
where people tend to do other things and get outside and get away from the market. And then you've also got the midterm elections themselves, which tend to take attention away from economics and the economy. And again, with this current administration's current president, been known and shown himself to get involved in down ballot elections.
Look at these cycles, man.
And that's
humongous. It is beautiful.
So you see that weakness. The incumbent president's party tends to lose seats in the midterm year. So we've got a very thin margin in Congress. That becomes a fear. It's better under Republican Congress.
It's so fast.
That's a whole other story, but
it's so
and then,
damn fast.
Q4 rally. Yeah.
So you say August, October is the best window to buy stocks, right? Wow. But that's right before the midterms. You're also, I'm looking at your notes, you're not counting in a possible shutdown, tariffs being overturned. So does this trend stay the same? August, October is the best period if we see some pretty big macro things, government shutdown, the possibility of tariffs being overturned, or does that kind of break in your mind the historical precedents and the pattern that you're seeing?
Well, I mean, that's where the fear of what's going to be the outcome of the midterm elections start to happen. Market's an anticipating mechanism. It's going to go down ahead of the elections. And August, October is that weak seasonal period anyway. Didn't happen this year, which is a bullish sign in my view. So that sets up this Q4 rally. And the sweet spot of the 4-year cycle is Q4, the midterm year, to Q2, the pre-election year. Dow and S&P up 19%.
Candles are strong with this one coming in,
almost 30, 29.3%, I believe, from Q4 of midterm year to Q2 of the pre-election year. You get that 50% move possible. NASDAQ does from the midterm low to the pre-election year.
All right, now I'm kind of feeling FOMO, but it's fine.
So it's just set up. I mean, Q4 is where all the rallies happen. We've seen that so far this year a bit. I mean, there's some
they're about to break LOD. Looks like
a big AI tech boom year, but
fucking flushing calls crazy.
I don't think the AI super boom is over just because the calendar turns.
All right.
I mean, I'm not gonna lie though. Like that is literally setup down, setup up, and then like that is insane to actually see them fucking full out flush though. Wow. IWM LOD broke. This is bearish. Bearish. LOD about to break. LOD breaking possible. It's so crazy bearish showing though. Alright, it's most likely better to holy shit. Alright, now smart money deductors may be coming in when LOD breaks. LOD breaks, there may be some sort of flush down a little bit. Alright. It's in a downward trend. It's contained in a downward trend. IWM 2 hours is bearish as fuck right now too. IWM 2 hours bearish as fuck. They hovered it at 8 a.m. into 9 and then they fucking faked it out crazy. So it's still bearish. Everything is still bearish as hell. Time is 10:15. I mean, look at how fast they're going down. This shit literally trapped everything. Bottom of the algo range we are already at within minutes. Right at 10:10, I said, hey, bottom of the algo range, most likely LOD testing, LOD probably here, right? And now we are here at LOD testing already. All right, now LOD breaking. I'm doing 2.5K SPY puts right now, 2.3K. I don't care, dude. This shit is crazy bearish. LOD just broke. There's a divergence at the floor. There's a divergence at the roof too. Alright, now let's see. This is fucking 6th, 7th day bearish as fuck on Tesla. They do reject. IWM, this is like the 7th day bearish as fuck too now. Bears are crazy. They broke the floor. They want to flush this shit a little bit lower, and QQQ might flush here. I'm up $153 already. They are. Come on. Just need fucking 5 minutes of LOD flushing. Risk is there. I'm pulling into 3/3, but I'm expecting them to go fucking lower and clear the divergence and then fucking bear trap later, so I think they want to go a bit lower today. There's a gap above 6,928. There's a gap below at 6,876. One of them about to be a fucking huge magnet.
Opening bell, take a look at the real-time exchange as we get started with trading. Here's the big board. It's non-profits, Dow rising, and Who's the First. They're doing the honors. They're celebrating their merger over at the NASDAQ, celebrating the launch of the founder-led ETF.
You know, a stat that stood out to me, it was...
It's so goddamn mixed. Fucking huge candles playing at the floor. Their algo ranging at 10:15 at the floor. Dude, is this candle bearish? Is this candle bullish? This shit has to be bearish, right? What the fuck candle is this? Look at this shit on QQQ. Playing to 4 p.m. or 9:30 a.m. open. 4 p.m. close. Wow. Look at this. This is setup. Look at this fucking setup, man. Another Christmas tree. Merry Christmas, everybody. Let's get Merry Christmas in chat, folks. What the fuck? Merry Christmas. Happy New Year. Oh my god.
For more on the metals trade, Daniel Galley, TD Cowen, Commodities Strategy Director. And Daniel, can you tell me for sure that there's that there's nothing technical or short covering.
They're bringing it out.
Nothing like that going on. So all the conspiracy theorists think.
They're bringing it out the 1980s, folks. I've been saying on this live stream for 2 weeks now.
You know, Daniel Hunt Brothers.
Holy shit, they're bringing out the 1980s, folks. I don't know what the fuck that means.
Yeah, exactly.
All speculators, all guessers, all estimators. Oh, motherfucking candle traders are donezo, right?
I mean, this is even more significant than
One
that.
third, two third, three third, bearish.
Performance in silver market since 1979.
They want to go
and,
lower in the
you know, to answer your question, no, I can't tell you that there isn't anything technical. What's
they want to
happening
go
in silver
lower in
markets
the
is
higher
extremely
time
technical.
frame. This is creating a huge
you know, roughly a year ago, we argued that the silver market was sleepwalking into a silver squeeze. So in our view, we were always going to end up in this moment in time where what we were expecting was
insane. I'm at 2.7K. I'm fucking holding.
In significantly higher prices.
2.6K. Sorry,
that happened.
I'm fucking holding.
But this actually reached its climax
like
over the course of October, and we've since rallied more than $25
I'm already up 1K for the
an
day,
ounce,
so
as wild as that is to say,
good, but
since the October sell-off to date.
What's
actually driving things now is that we have transitioned away from a physical shortage to a liquidity shortage. And this is largely a function of the imminence of the Section 232 critical minerals investigation, which silver is now a part of, which has constrained the arbitrage that almost guarantees liquidity in precious metals markets and silver markets in this case. So with the arbitrage now constrained,
no confirmation long
retail
yet. Time
flows
is 10:20. Market
are
is
having
saying
a significant impact on
candles
prices.
are flickering.
So the way we're looking at this is before the lights come on, before that deadline for the Section 232 critical minerals investigation comes up, retail wants to dance.
10:20.
And as I mentioned, retail inflows are having an outsized impact on prices in the meantime. When the lights come on,
the floor did not break on QQQ.
No, I was just, Dana, you know, gold I can almost make a case for that it makes sense with central banks and you know, for a long time it built a beautiful saucer bottom
Look
and
at the
everything
5
else,
minute.
and it was always
It's up
probably
to the bears now.
You know, headed to 4,000 or 5,000. But this is silver is almost separate from gold. It's not the same thing we're seeing, is it, Daniel?
No, it's absolutely not the same thing, right? As you mentioned, central bank demand has been a really big driver for gold markets from 2022 to 2024 in particular. When we're looking at what happened in 2025, the story actually kind of changed in gold markets. It's transitioned away from Eastern buying activity to Western buying activity. Right. So, you know, one anecdote that we can share on this is that the most popular gold ETF is now roughly 65% as popular or as widely held as the most popular ETF in history.
They broke LOD, so I'm thinking they go a little lower here.
Has actually resulted in this kind of widespread accumulation of gold from institutional investors in the West. So what we need for gold's bull market to persist going forward is we actually need those position sizes to start increasing. And for that to happen, we probably need the administration to make a mistake on Fed credibility or otherwise.
Oh, yoy, yoy. Oy, yoy. We gotta get our boy KG on. KG, where you at, son?
That up here a tad bit, but this is kind of par for the course that we've seen over the last couple of days.
Yeah, KG, you mentioned the tech sector, and I think you know, with the Nasdaq 100 about 2.5% below those record highs, it's been consolidating. It feels like we're not going to get any semblance of a Santa Claus rally, maybe for the third year in a row, unless we see the tech sector participate. We had
Let's do the first poll of the day, guys. We have 132 people here. God bless every one of you. Thank you so much for being here.
So maybe that's what the hopes are for, you know, a Santa Claus rally to break that two-year losing streak, is that we need tech to participate because it's such a big component within the major indices, right?
New watcher. And if you have not already.
It makes it a lot easier for the S&P 500 to actually move higher if you have technology, communication
Your opinion,
services,
what is
as well
incoming?
as consumer discretionary
next door,
leading to the upside here,
LOD,
Tom. I think also if you're kind of looking at the components, I think there's still maybe some fears around the AI trade within the technology sector as a whole, as Oracle, as you talked about, sees a little bit of weakness. But overall, I think, yeah, you're right. The components and the construction of the S&P 500, it makes it a lot easier. And sometimes that rotation trade gets a little bit more defensive in nature, which also kind of leads to this compression in price.
KG, let's get into your wheelhouse, and that's going to be the commodity trade today. We're seeing a rebound in gold,
they
up
want to be
nearly
here maybe for a little bit.
1.75%. Silver's popping again, and then you have palladium and platinum also higher, rebounding from yesterday's, maybe some profit taking there. But this has been a volatile trade here, KG, near record highs for gold and silver. I mean, what's your take here on this commodity trade? Because just, all things being equal, this is one of those areas where I just get a little bit antsy right here and kind of stay away from this trade because it's been so volatile.
Low of the day, VWAP.
Yeah, it seems kind of a little bit of a topping pattern taking place, right? Large volume, excessive price ranges on an intraday basis for a lot of these commodities. And yes, we saw a pretty aggressive sell-off, especially from the highs of silver yesterday. And maybe we are seeing a little bit of a retracement bounce. There were some concerns when it came to the margin requirements being increased when it comes to silver, as well as maybe some of these other metals here. So at the end of the day, I think you still look at the primary trend, which is to the upside. And if we do have a topping pattern, I think the aggressive nature or the range-bound nature of this market, especially when you're looking at the metals here, is kind of indicating that maybe something does kind of break from a technical standpoint, but the fundamental thesis is actually still intact. If you're kind of looking at the demand for copper still rising to the upside, copper still making new all-time highs, silver still in high demand when you're looking at the industrial applications, as well as the Fed and other central banks actually buying the metal in order to shore up their own balance sheet. So there's still a reason that we could see a lot of these metals move to the upside here.
Perfect, crazy
I also would say, some of the thinly traded metals like platinum and palladium probably will be your first signal.
Bears are still here showing, and then they want to maybe trap every bear. I don't fucking know.
It might mean that this party is over. But for now, you have to take yesterday's price action as a little bit of a pullback.
Look at the MACD volume.
It's still a phenomenal trade here over the last year or so.
Look at the MACD volume. They used it from all the way at the bottom to bring it all the way up, all the way up, and then they went positive, and then the positive just literally
it's one of those metals that does give you an economic gauge across the globe.
Look at the volume.
It gives you a little bit more of a risk on tone. If you start seeing that kind of pull back, I think that also kind of coincides with the technology sector pulling back as well. There has been a strong correlation between NVIDIA and silver over the last year. We did see a breakdown of that at around the middle of Q3 or so. Does that kind of realign again in 2026? I think that's the big question.
Yeah, I mean, let's dive into that just a little bit here, KG, before I let you get off the hook on this commodity trade, because I don't understand the fundamental basis behind some of the moves that we've seen, and I just think it's maybe become a popular trade for maybe intraday day traders and things. I understand the industrial complex and how maybe the data center build out, maybe the AI build out, maybe the manufacturing resurgence here is going to play a part. But is it based on fundamentals? Because I understand gold, central bank buying, the dollar's been weaker. That's been supporting some of the commodity space. But is it really fundamental, or is it just a trade, a popular trade here, KG?
Yeah, it is fundamental. Right before this I think a lot of individuals have been looking at this as a risk-on type of trade and utilizing it as like a little bit of a
there's two people in the WhatsApp group. I got an alert.
But the fundamental catalyst for silver, for that matter, has been the fact that LME, or the London Metals Exchange, has seen a significant amount of delivery notices or redemptions for physical silver. And so that has actually drawn down a lot of the inventory levels for the LME. About 2 weeks ago, 3 weeks ago, China also sent a significant shipment of silver to the LME as well. They had some obligation that they had to fill. And then we will see some restrictions in silver exports in China for next year. Now, China, depending on the data source that you look at and how you kind of categorize it, China pretty much holds around 40% of market share for exportable
I'm getting a lot of weird messages,
smelting operation,
right?
processing
People think
operation,
like,
and then they
I don't know, this guy that I
some,
knew from maybe like
silver
February
ore
or something
within the ground as well.
just made up a story.
The market's concerned that
he's
China actually cuts off all
he
silver
hasn't watched my
exports at the
stream
beginning
in
of
a
next
long
year.
time
This
or months,
metal
but he wants me
trade
to
war,
add
if
me
you
back
will, may
because I
continue.
removed him
And
and
so if
some
we do see a
inactive members from
contraction
the
in
WhatsApp
supply in the
group like
market,
2-3
especially
days
coming
ago
from
over the
China,
weekend or
that
something,
should
and I
push
was like,
prices to
dude,
the
like,
upside here. And then China continues to double
I
down
know
on the
you.
industrial revolution there. And it's not so much the new housing builds, it's technology,
stop trying to be in the WhatsApp group,
it's
man. All
renewable
the inactive
energy,
people getting removed
it's a lot of
anyway,
different things.
so what's the
So
point?
yes, as the price kind of moved too far too fast, that might be the case from a technical standpoint, but from a fundamental standpoint, you can make that case that supply is just not going to be pretty. It's not going to be elevated when you're looking at a lot of these silver, these metals like silver or copper. Now, last thing to kind of note on this, Tom, if we see a reversal from the U.S. policy when it comes to tariffs around a lot of these commodities, that could actually free up a lot of inventory. The COMEX itself actually has a significant amount of inventory for silver and copper, but it's locked up at this point in time. If we do see once again any type of reversal in policy, that could actually release a lot of that inventory and can hit the market and then push prices lower. So there is a fundamental catalyst for this. It's not just artificial intelligence. In fact, I would probably put that fifth on the list if you're looking at top 5 lists. That would be the number 5 spot when you're looking at the reason why silver is moving higher.
All right. We'll agree to disagree maybe on that because I believe a lot of maybe the froth in some of those.
Agree to disagree.
Down for the second day. I'm waiting to see if we get the Santa Claus rally. I know a lot of folks are watching for that. And what happens next year? Well, he may have all the answers. James Demert, maybe not, but he can try. Founder and Chief Investment Officer at Main Street.
Did you hear that? A lot of people
stocks are down for the second day. I'm waiting to see if we get the Santa Claus rally. I know a lot of folks are watching for that. And what happens next year? Well, he may have all the answers. James Demert, maybe not, but he can try. Founder and Chief Investment Officer at Main Street Research. It's always so nice to have you
Something
back
with
here
the holiday.
James.
Maybe they're using that as a setup.
Year. You were bullish. You felt good. I mean, this is our 3rd year of double-digit gains. I mean, let me just start with near term. The Santa Claus rally is usually 77% of the time since 1950, up more than 1%. What do you think right now?
Well, you know, we're in that last week, and this is when the Santa Claus rally usually powers through. People sort of question it. And what's interesting is it usually goes right to the end of the year, which will take us, what is that, till Wednesday. And then it follows through for a few more business days. So our target for the S&P was 7,100 this year. We're in striking distance. We need to squeeze out, another 3% between now and Wednesday. I'm not sure we'll get there, but I think we're close enough. So
hovering near the floor. If we chop here, more likely than not, floor break coming at some point.
You know, how positive are you on 2026?
Yeah, we're really positive about 2026. I think it's going to be a different market, but we're at 8,100 for the S&P. We're global investors, so when we look at foreign markets, we think they'll actually do even better. So 8,100 takes us to about 16% from here. So we're double digits, mid double digits in the U.S., even higher outside the U.S.
Yeah, I saw the stock 600 this morning. I think it hit a record or something. It just, you know, we've seen some interesting notes abroad. When you say we like to invest abroad, where?
Well, we're about 40% outside the U.S., 60% in. I think that's not a bad message for investors. If they look at last year's returns, or this year's returns, I should say, the foreign markets outperformed the U.S. by double. So where we look is developed countries almost entirely. Europe, Japan is really probably the biggest part of our focus. And we like companies that have a lot of liquidity and strong balance sheets.
Guys, all you active people in the YouTube chat, I hope you guys are in the WhatsApp group.
Trading at about 50% discount to what the U.S. market's trading.
Timmy.
That's a big deal.
I don't want to say everyone's name, but I mean, we see you guys. Mel's, Mark, David, you know.
That will drive us to 8,100
every single day, dude.
What do you think some of those will be?
Scott.
Well,
seriously.
Those are the type of people
but I think that we need in the WhatsApp group. Those are the type of people that we want to have in the WhatsApp group so that we can have a community where we share charts, where we share things that we see over the weekend, or you know, whatever it is that people
which means corporate profits should
we don't want
continue to be stronger than expected.
Don't even watch
if we look at the last
dead bots
technological
that
revolution
don't
in the
even
90s,
want to deduct about
productivity
their
growth
own
is really
things
what
in their
drove
lives and
stocks
their thinking.
to have above average returns. So that's where we come into that 8,100. Can stocks do better than a 10% annualized return? We've normally seen, we think we can get
if you don't want to, if you don't want to join for any other reasons, that's fine too. But I'm just straight up saying.
You're still on.
I get a lot of
You
messages
didn't say
from people
anything else when I said what drives
I've saved their contacts too, because I've been friends with them, or I've known them, or I guess since like December. But like I literally got a message from yesterday saying,
I think the tech companies drive it, and they did. That's where you wanted to be.
Hey, I just saw that you removed me. Can you add me back?
I think in 2026, I would agree with
I can't
some of
add
the
you
consensus.
with
the
the
market
link.
does
I can
broaden
only
out.
forcefully
So
add you back because
technology
I removed you. It doesn't allow
not
people.
only
And
tech
he just didn't even
stocks
read
in
that. It's saying,
2026, but it
oh,
drives
can you send me a link saying you can't join because you removed? And I said, so you didn't read a thing of what I said. And I said,
and that's a good thing because
I literally said,
like, 7,
I told him everything.
PE ratios are much more reasonable.
The guy just wants to be invited back, and the guy just wants to be in. I don't even know, because when people are in, they don't. It's not even like they use it anyway. It's not even like they see you. It's not even like they literally are on, or it's not even like they type anything in it.
And gold has pulled back $173 today. So it sounds like the Ukraine-Russia story may be getting closer. How do you feel the markets could react to
I
these
guess that's what
here?
my friends thought.
Nicole, I love that question. We think the big surprise in 2026 is the market starts to discount a peace treaty with
a lot of my
Ukraine
people,
and
or a
Russia.
lot of the
That's
friends or whatever, people that I cared about from the other community thought that this is just some
you don't want to wait till there's an agreement. We know it's not close, but the market will start to discount that before it happens.
No idea.
Now that has some impact certainly on gold prices. That's why you're seeing them trade down today.
Everything has been so serious to me in my head.
Important tailwind.
I've always cared about things so hard, and like people just literally. I mean, to be fair though, this was a guy that was stuck in Tesla like 80K, and he was down at 490 since last year, and he said, oh, I'm not trading anymore, but I'm just gonna hold this and see what happens, and then end of the year maybe it'll be back. And it is back to where it is now, and I'm glad it is. But I'm just saying, like, I guess I stuck around, or I was in the wrong environment where I cared about people that don't even care about caring about, I guess, what people care about, which is what is important for people that care about what is important for them. But yeah, I respect that, but it's just, yeah, it's heartbreaking for sure. It is very great, very, very great too. Man. Well, Netflix is at $93.
6 media investors weighing streaming margins, content discipline, and whether consolidation can drive better returns. Joining us now to frame the outlook for the sector, Barton Crockett, Rosenblatt Securities Senior Internet Media Research
Analyst. Just gotta love the market
analyst.
cycles. I'm not gonna lie though.
On that
This
note,
is like
let me start with Netflix, because it's been a question
seeing the
to
market
me,
go
course,
up, seeing the market go down, just like so structured, so beautifully. I can't even lie.
Or at least
like,
the streaming and studio of Warner Brothers.
It's so beautiful.
How do you view Netflix
Holy
as
crap,
it heads
bears are
into
here.
next year? Obviously, it will not close the deal
Bears
for
are
quite some period
here.
of time, if at all.
All right.
But how do you view it from a multiple perspective, from what that says about the company's business, and how you view the stock?
Yeah, look, we moved to a neutral rating on Netflix around this deal. We do think that this is going to stretch out. We think it could potentially become a competitive bidding situation. And we think it raises some questions about Netflix's capital kind of allocation priorities. And, for those reasons, we had formerly thought that Netflix could trade at a premium to its growth rate. Now we think it's, it gets less of a premium. So we've got a $105 price target. Still a great company, but I think it's going to be hard for the stock to really work as we digest what in the world is going to be the outcome here.
You can do it.
Clearly, two very different outcomes if they win or if they lose. I suspect at the end of the day, they're not going to walk away with this because I think
you can do it.
The party on the other side, the Allisons, can just write a bigger check. And I think ultimately that's what it comes down to.
It could, although Larry Ellison didn't become one of the world's wealthiest men by making poor economic decisions. You know, that said, either way, let's say Netflix just
squeeze it lower. Look at the volume.
No
volume.
To purchase streaming and studio of Warner Brothers. They're not going to get the deal done next year. So is the stock just dead money as it waits for the regulatory approvals to potentially come in?
Yeah, I think it's hard for the stock to work when there's concern about them having to raise their bid. And I think that's really kind of the biggest overhang.
No way.
You know, in terms of like the core business, I do think that
some bullshit.
You know, one of the questions that comes up with this deal that they've entered into, this agreement that they've entered into, is this really the right place to put this much capital at this point? Netflix has clearly done great with scripted content and TV and movies on their own. Do they need to put all this money to get, you know, more kind of scripted content, you know, great scripted content, but more content from Warner Brothers? Or would they be better off moving in a different direction, where there's more user growth right now in places like user-generated?
Why'd they show so much bearish, and then this shit is literally just
lean deeper into the free ad-supported television areas. You know, both of those seem to be much stronger as a consumer interest right now, and you know, I think we have some concern that perhaps they're overly distracted by, you know, what's been their strength, which is scripted.
The 2 hour might be reloading.
Missing the change in what's happening in the market right now, which is these other formats.
I wanted to ask you about this Meta deal today. So it's buying Manus, which at one point it's an AI agent company, right? One point was hailed by Chinese state media as the next DeepSeek. What do you make of this deal?
Bearish. Look, I think that this is potentially a great deal for Meta. You know, it's a deal that, you know, time will tell, but you know, it has the markings of what could become something that we look back on years later and think, geez, this is not too dissimilar to the home run they had with their acquisitions of Instagram and WhatsApp. And you know, what I think you get with this deal is you get just a rocket ship growth story in agentic AI that fits really beautifully into all of the things that Meta's been leaning into SMBs, services internationally through WhatsApp. You know, what are kind of, you know, over 10 billion kind of revenue run rate growing rapidly businesses within Meta. You know, this provides a whole new kind of product suite that's kind of clearly demonstrated a great product market fit with what they've done thus far, and could really be kind of supercharged underneath Meta. You know, so we think this sounds great. We think the Chinese tie, you know, is a question, but the company has moved really aggressively to distance itself from China, laying off its Chinese employees, moving to Singapore, not really doing business in China. You know, and from what we're reading, it looks like the deal is completed. So, you know, this could be really, we think, great for Meta.
LOD 1035. That is something. Still hovering near the floor. 1035. IWM looking the most weak right now. SPY is not getting help. QQQ is the one that is holding forever on whatever this trend line is. Tech giants to test consumer. Is that Dan Ives?
Look, I mean, obviously it starts off at CES,
is that
where
Dan
I
Ives?
think that Jensen's speech on that Monday is going to set the tone set, right? Yep. In terms of autonomous, robotics, physical AI. But I think the reality is that despite a lot of the haters and the bears in hibernation mode, it is going to be, I think, just a booming year for AI and tech stocks, especially in the first half of the year. I think investors are underestimating specifically on software. Like we talk about not just Palantir, but MongoDB, Snowflake, a lot of the infrastructure plays, Nebius, and some of those others. It's about the derivative plays, the second, third, fourth derivatives, CrowdStrike, cybersecurity, Palo Alto. And I think what we're going to see play out, Microsoft, Oracle. Look, I think we sit here a year from now, Oracle is the name that I think investors are just throwing in the garbage. That's the one I think investors are getting. Why is that? Because it's the view, like,
I'm at
taking on
2.7K.
debt.
I'm going to leave at 3K.
OpenAI is not going to be good for their build. Look, if you look at any OpenAI related tech stock, from AMD to to Microsoft to Oracle, those stocks have sold off significantly. And I think the reality is this is an AI revolution where you're in. You talk about the AI party. It's 10:30, 10:45 p.m. Party goes to 4 a.m. Start at 9 p.m. And OpenAI is going to play a huge role in that in the infrastructure build out.
1 minute gap
So
down.
to me, Paul, it's like I think like tech stocks, they're up 25%.
Really? 25 in 2026. But I mean, is that the big names like NVIDIA? Because I think to myself, lots of competition out there for them. First of all, supply chain challenges continue. But you've also got Google and Amazon, big competitors who are playing catch up with NVIDIA. Can it really hold on to that momentum in 2026?
Look, there's only one godfather of AI. He's wearing a black leather jacket. His name's Jensen. And I think, look, they are 5 years ahead of any other competitor. That's why
We're in the
for
three
them,
third.
like even their third best chip, restricted H200 in China, despite whatever the politics.
If it really goes in the 5-15 minutes here, then we see
they want those chips because it comes down to
looks like they're about to go clear the
they
divergence.
are so many years ahead of competition. I think, look,
10,
AMD,
45,
that's going to be a major play that we see playing out. And then I think you start to look at like what Google's doing, what Microsoft is doing in this chip world. It's in an AI arms race, but here's the deal. For the first time in 30 years, U.S. is ahead of China when it comes to tech.
How about that?
That is, I think that's really like the most important thing here. That's
and it's getting lost in the sauce, I feel, what you just said.
Well, it is. Because for so many times, like, I'd be in Taiwan 18 hours seeing like factory fabs, then land in Newark Airport, there's some fist fight Dunkin' Donuts, and you're like, wow, we are like so behind. Now, switched.
So is OpenAI going to go public in 2026, and is that going to be a seminal event for?
I think early 27.
Okay.
They could file maybe by the late 26, but I think that's the thing. Like SpaceX, you think about Anthropic, you think about OpenAI. Look, the reality is that people talk about bubble. Some of the best companies that haven't even gone public yet, and I think there's a supply demand for big growth names, and that's why, to me, I think investors that are saying it's a bubble, tech's done, they're doing it from the 25th floor of a New York City office building or Metro North, right? I mean, the reality is like for someone like me that sees it globally, sees the demand and supply is 12-1 for NVIDIA chips today in Asia.
But here's the question. Is there enough energy out there to meet that supply? Because that's one of it's the biggest challenge going forward.
Look, if you think like the thing to me that like, if you're just like, what could spoil the AI party? Right. It's not about demand, fourth industrial revolution. It's not about like the use cases. It's energy and regulation. And look, energy, that's why like, you look what's happened on nuclear. You saw the TAE deal with, obviously Trump Media. You saw what Google's doing in terms of them buying their own energy company. I mean, energy is the biggest restriction in the U.S., but I continue to believe like nuclear is going to be the play there.
CES, it's 250, 300,000 people descend on Vegas for it. And it's been going there for 40 years. I've been going to this thing. This one feels like we might get like a seminal announcement coming out of this, whether it's a product, a service, an investment, a deal. It just feels like maybe this CES might be something where something really material pops out of Vegas.
Yeah, I agree. Because like, look, for so many years, CES is like, oh, great, a refrigerator that talks to you, a cool drone. Now it's really become like central to when you think about the AI revolution. I think when you talk about chips, when you look what's coming out of AMD, I think NVIDIA is really going to double down on robotics. 1 minute gap here in I think IWM. Quantum is another one. If you go back a year ago, that's where Jensen was sort of quantum's like 10, 15 years away. Quantum stock sold up. I actually think there's going to be a lot more bullish when it comes to quantum.
5 minute.
And look, I know like half the companies that I know that are going there, they're not officially there. Why are they going there? They're not going there to to go to the Cosmo, go to the Win for dinner. They're going because they're looking for acquisition.
I feel like SPX as well.
During CES, if I talk to a CEO, I think my first question is going to be, why are you not in Vegas?
RSI is in bear territory on the 1 minute candle here.
You're touched by
bear territory,
technology.
bearish still.
Yeah, exactly. But to Paul's point, this isn't just about like consumer gadgets, 100-inch televisions that somehow talk to you. Now it's really become central to like
if that
what
gap
are the
clears,
think about the Chinese presence there in terms of XPeng, BYD, everyone else. You think about autonomous, robotics, and that's why like I think the one thing like to stress to anyone listening is like this is AI is not just about like ChatGPT. What model do you use? We are now. This is the year Apple goes deep dives into deep end the pool when it comes to AI on the consumer side. We're now going to hit the next level of the AI revolution, but this is a 1996 moment, not a 1999-2000 bubble moment.
Yes, thankfully. Do we expect a big China presence at this thing, given the relationship right now between the U.S. and China? Okay.
If you're a China tech company, you have to come here. I mean, I think like when I think about like the presence last year, that was already significant. This year, it's booming because for them, okay, like they're not going to be able to sell into the U.S. at least currently, but this for them, it's a flex to muscles on the global stage in terms of them selling South America, Europe, Australia. I mean that
because the world descends upon CES, right?
Because like when this is the world event, but to Paul's point, like if you're not there, it's almost like being at a wedding at a table by the kitchen with random people instead of being at like kind of like Paul. He's always like front and center, like he's at the cool
January
table.
6th, guys. Apparently, tech giants are testing consumer AI interest at CES. So that was a big thing last year. I guess that'll be a big thing this year as well. In 6 days. In 6 days.
Greenhouse, Chief Strategist and Managing Director at Solis Alternative Asset Management. How are you feeling, Dan, going into next year after we've chalked up another double-digit gain for the market this year?
I still feel pretty good. I keep talking about yes, the calendar has turned, but what are the themes still at work? And the AI theme is still driving markets top to bottom. And we're talking about the SoftBank deal today. It's hard to imagine that this theme ends when you keep getting headlines like this of this size. And so I know everyone's worried about all the worries that we've expressed day after day, week after week. But at the end of the day, that theme still seems relatively in place for me. And with it, it probably continues to drive markets higher.
Which is just the sheer spend on AI?
It's the fact that we haven't fully adopted it yet. Companies are only beginning to sort of implement it in a meaningful way and get the productivity and efficiencies that are going to help support margins. But yes, the amount of spend and every single conference call that we listen to, every conference that these guys appear at, they all keep telling us demand is greater than supply.
Why? Because
and at a minimum,
is bearish
you want to see
for
this to end. You want to see that slow down. And I haven't seen any evidence of that.
There's been no let up. Obviously, we're just through the last quarter in terms of all the hyperscalers and everybody else reaffirming or increasing their capex plans. That said, the bigger question, I don't know, are we going to get it answered in 26, which is what's the return going to look like on all that invested capital?
I know everyone keeps talking about this, that this is the year where we're going to have to see the return. I don't know that that's the case. I mean, it could just be another year where we spend $1 trillion. Obviously, there's some differences because now we're tapping the debt markets to a greater degree than before. But as you know, all these companies have basically their leverage is basically a half a turn.
Cycle.
Many of them, not Oracle.
Oracle's the exception at the 3 or 4 times debt to EBITDA. But the Meta and the rest of them are call it half a turn of leverage.
See this bullishness
so they're not particularly leveraged.
Did anybody see this bullishness coming on QQQ? Oh my God. Yo, that is cooking the 3/3 overstaying. I'm not gonna lie. I left at the bottom. I left at 1044, 1045, and literally, oh my God, they're bouncing and doing the overstaying, fucking killing 3/3. I can't lie. I definitely felt like I was overstaying because I was literally waiting LOD and bouncing. LOD broke. So I mean, hey, they did go for 5 more minutes, 1040 to 1045. That's wild. 1050. Knifing and also cycle creating with the IWM gap not filled or filled. Let's see. Oh, it looks like it has filled. Wow. IWM gap has filled. Now let's see if IWM wants to. Oh my God, candles are stacking. IWM bouncing. So let's see if it wants to help it rocket now. Cycle trading though, definitely to reset shit. There's so many bears down there. I'm gonna send the SPX put to call ratio if I can. See. No, not yet. 1052. Wow. QQQ looking like a nice little crown. Head and shoulders crown. Super. Wow. Time is 10:55. Tesla boring since market open. But Tesla boring since market open. IWM on the higher time frame. We lost the 0.618. We dipped below. Now we're coming back trying halfway of 0.618 and 0.784 or something. Holy, the bulls are stacking here big time. Bears are getting the treatment literally off the floor. I literally said somewhere here, right? Until the low of the 1045 breaks, all bears, all shorts are in danger, right? And that's why divergence, there's so many fucking bears in 3/3 and they're cooking it all in the 1/3, 2/3, 3/3 bullish cycle going from 1045 into 1055. That's 5 minutes, 10 minutes, but the 10 minutes is absolutely strong. What happened earlier? 1045 to 1050, 1050 to 1055. That's 10 minutes. It was absolutely strong. And look at the MACD doing the same shit. Absolutely strong from the floor to the roof, ripping it. From the floor to the fucking roof, ripping it. That is absolute power. So time periodic based too. If you really look at the if you really look at the pattern, it's at the exact time interment to 9:45 to 9:55, 10:45 to 10:55. Is that shit a coincidence? I don't fucking think so. That's timing and cycle being fucking perfectly aligned, right? That's a little bit weird. I'm not saying it's going to reject here. I'm just saying if you literally look at the time and if you look at the cycle itself, it's exactly the same fucking time. I just noticed that as I was just verbally saying this shit. Isn't that crazy? Isn't that fucking crazy? Like what? Man. That is disgusting. Time is still 10:55 into 10:56. That is such a powerful fucking boom. They allow the bearishness to come and then they boom it up, and they allow the bearishness to come, set it up again, and then boom it up. That allows the market to 1/3, 2/3, 3/3 down, 1/3, 2/3, 3/3 up, 1/3, 2/3, 3/3 down, 1/3, 2/3, 3/3 up. Oh my God. IWM bullish into 10:55, the last minute at least. All right, 10:57 is here in 21 seconds. 11 a.m. That's really crazy. I can't believe it. What the fuck? 9:45 to 9:55, 10:45 to 10:55 is the most absolute shit I've seen in quite a long time. Like, I don't do anything off of technical or like just literal, you know, pattern recognition or whatever the hell, but that is absolute pattern. Sometimes you see that in the market, but I mean, what does that mean? Someone out there, some participants out there are doing that, I guess, on time like that. Like, market broke out into 11. Market broke out into 11 on QQQ. Oh, they're changing it up. Wait, QQQ went from 9:45 to. Look, QQQ went from 9:45 to 10, so not 9:55, and then now. This shit could be a trap. This is weird. This is weird. Yo, it's actually perfectly. All right, let's see what happens at 11 now. It broke out into 11 on QQQ and it did not on spot. And it's doing the exact same thing right now. Same exact pattern happening. Something crazy. I'm not doing shit here. This 3/3 chasing bullish too. I am not doing shit. This is 3/3 bearish cycle as well. What do I mean by that? We are in a 3/3 bearish cycle. We are in a 3/3 bullish cycle. Market is deciding what to do with more setups to go. Like the top of the downward trend line, bottom of the downward trend line, 6,900, everything. Okay, SPY is now flipping up. QQQ is also. IWM is rallying from the floor to where? Wow. To where? That massive volume. Wow, what a pattern we're doing today, man. This is pretty crazy. Crazy strength coming in and out. Both ways. Crazy strength coming in and out both ways. Up, down, up, down. Like no volume down, but down. There's a little bit of volume, and then crazy volume up, and then all down, and then no volume going down, and then crazy volume up, going up, and then what? Like, there's actually a lot of direction happening. It's so much power. They're doing it. And burning the fuck out of one side, burning the fuck out of that side, burning the fuck out of this side. Time is 11. I mean, is this not a huge range? Like, is it $1 really? It just looks so much bigger, maybe because I have my chart zoomed in. But I guess it's $1 here. It's $1 we've been kind of doing this on, but I mean, it still has to be a fuck ton of shit. IWM been playing in the 3/3 for 1, 2, 3 days now. Alright. Actually, it's like 2 days. Because when cycles extend, you kind of have to draw out what has happened. So, the MACD coming in bullish from being way oversold. So maybe something is happening. Alright, this could be something maybe on IWM. Finally, something. 1, 2, 3, 4, 5. This is the 6th day, so we'll see. IWM. I might have jinxed it, but if I jinxed it, don't laugh. I'm just saying. We want to see what happens on IWM. QQQ running. SPY running. target might be a couple of cents above, but I mean, they're already fucking here. Wow. 11. They have a couple of cents more they could go, but like, wow, dude. Look at this shit. 6,906 maybe? That is truly absolute. 1/3, 2/3, and 3/3. I really thought it was going to go higher here too. That's the thing. And then 1/3, 2/3, 3/3. And then I was low-key thinking it was going to go lower here. And then I was thinking it was going to go way lower here. But then a little bit lower. And then 1/3, 2/3, 3/3. Like off of 1040 into 11. The thing is, though, there's so many possibilities the market could do at any moment. This is why it is just best to be fluid. And at every single cycle they create, you just literally just mark the cycle. You do reasonable, logical analysis on top of it by looking at many routes too, not just one or two or three. And then just being literal cycle analysis deduct. That's all it is. Like, I don't know, man. It's absolutely wild to see this shit go up and down. And like, look at this shit. Look at the chart looking like this. Like, just candle traders, bro. So, like, this is the best thing smart money does for risk analysis for themselves. Straight up. Wind direction, trend direction, cycle analysis, trap, time confirmation. Big money. 1045 is the low of the day, so the wind is north or neutral from 1045 until the wind says let's break the roof or let's break the floor. Where are we right now? This is somewhere at the 0.5 Fibonacci of the day. If you draw out the day, at 1050 we were at the midpoint, and now 11 we're showing the roof basically. This is higher than 0.5, so 0.618, right? What were we doing at 1030? What were we doing at 1020? What were we doing at 1015? In hindsight, at the floor, right? Depending on how you're looking at the cycle too, I guess, right? But I mean, this is what they're doing. Just mad fast with hybrid trading algos, computers telling them, with ability to see institutional people, institutional players' ability to see a retail. Wow. Yeah, retail, all that positioning. IWM rejecting. SPX is breaking out now. We have hit the top of the trend line. It went way higher at 6906. Things are trying to flip. Ooh, things are trying to flip. $11.05. It's a nice little cycle going up. Getting into overbought territory, but I mean, it's a nice cycle going up from 1045 to 1105 too. Not gonna lie, that's a fucking rocket candle. Now 1105 is, wow. Let's see if we have any presidential live streams coming out today.
Joining us is Dan Green.
Everyone's worried about all the worries that we've expressed day after day, week after week. But at the end of the day, that theme still seems relatively in place for me. And with it, it probably continues to drive markets higher.
Which is just the sheer spend on AI?
It's the fact that we haven't fully adopted it yet. Companies are only beginning to sort of implement it in a meaningful way and get the productivity and efficiencies that are going to help support margins. But yes, the amount of spend and every single conference call that we listen to, every conference that these guys appear at, they all keep telling us demand is greater than supply. And at a minimum, you want to see, for this to end, you want to see that slow down. And I haven't seen any evidence of that yet.
No, there's been no let-up. Obviously, we're just through the last quarter in terms of all the hyperscalers and everybody else reaffirming or increasing their CapEx plans. That said, the bigger question, I don't know, are we going to get it answered in 26, which is, what's the return going to look like on all that invested capital?
I know everyone keeps talking about this, that this is the year where we're going to have to see the return. I don't know that that's the case. I mean, it could just be another year where we spend $1 trillion. Obviously, there's some differences because now we're tapping the debt markets to a greater degree than before.
Let them do what they want
as you know, all these companies have basically their leverage is basically half a turn.
What's going on.
Many of them, not Oracle.
No, Oracle's the exception at the 3 or 4 times debt to EBITDA. But the Meta and the rest of them are called half a turn of leverage, so they're not particularly leveraged. So they can, and we know the IG market is 10 trillion in size, give or take. So there's ample room for this to continue. But I know, again, the main point is people keep saying we need to see, we need to see, we need to see. It seems like, to me, like a nice thing to say something different, but I don't know that that's rooted in any...
So we're just going to sit here next year, have the same conversation that we're having right now?
Why not? I mean, listen...
Now, what does that mean for the S&P?
Well, listen, this is the argument that as long as these companies are as large as they are, you need to continue to be, if this is what you do, it's not what Solus does, but if this is what one does, you need to continue to be exposed to those names because you're just going to underperform. But at the same time, we've seen, as everyone has noted, some change in allocation here. Some of those larger names have sold off. Even some of the derivative names like Eaton and Vistra and Vertiv have sold off, and other names have picked up the slack, healthcare, financials, some materials names. So you're starting to see a rotation. So that's really the question, I think, going into next year. Not whether the AI story is going to blow up, but rather whether you want to continue to be exposed to the largest,
hey guys,
most
let's hit the
obvious
like on
names
the
rather
live
than
stream.
something
Thank
else.
you so much, the 60 of you that have already hit the like on the live stream. Please, please.
Meta is striking a deal to acquire AI startup Manus. It creates AI agents that it sells to small and medium-sized businesses, or at least they are the users of these agents. Joining us now, Gil Luria, D.A. Davidson Managing Director. He has a buy rating on Meta, price target of $825. I don't know how much you knew about this company coming into today, Gil, but I'm going to rely on you to sort of give me a sense as to what it could mean for Meta. Obviously, at $2 billion, it's not a large acquisition, but there does seem to be some belief reflected perhaps in the stock price move up at 1.2% that it could mean a lot to the company.
Yeah, it could be particularly helpful in the AI applications for the consumer. Let's not forget, there's 3 fronts Meta is fighting in. One is that super intelligence front. That's where most of the $200 billion are going to. Second is merchants and giving merchants tool to have better ads. That's where Meta's been very successful. That's why they're selling so many ads. The third one is compelling consumers to use AI through Meta properties. And one of the things they saw in Manus was it was being incorporated into WeChat.
MACD turning bearish on the 1
it's really
minute.
A model for what they want to do with WhatsApp. It's this tool that allows you to do everything. It's PayPal, it's chat, it's payments, it's everything. And what they want to do with WhatsApp is the same thing. So by taking Manus and putting it there, Mark Zuckerberg is going to give
Even
us
if they pull back here, I don't
companion
expect any
that he's
huge
dreaming about.
pullback.
This
There must be so
friend
many
slash
bears
assistant
down
that
there.
helps us
Maybe
do stuff.
even at
And
VWAP,
that's why this is an investment that he wants to make, so he can be successful on that third front. So he can be competitive on the consumer front, where he's fighting not just OpenAI with ChatGPT, but also Google with their distribution through search, through YouTube, through all their other properties. That's what this looks like to us.
So, I mean,
is that a moneymaker?
Everything.
It can be. Again, WeChat is phenomenally successful. WhatsApp is really early stages of monetization. If he can keep the consumer in WhatsApp, using it in a lot of different ways to pay, to book travel, to book reservations, to accomplish tasks over time, he can sell more ads, he can monetize the consumer better. That is a way for monetization, because let's not forget that $200 billion into superintelligence, there's very little monetization that we can be aware of so far. So putting $2 billion to improve monetization on consumer in a way that's already somewhat proven maybe makes even a little more sense.
Bulls are holding strong. So it's either IWM bears or QQQ
It's time now for the big picture, so let's welcome in Joe Mazzola, head trading derivatives strategist at Charles Schwab. Very good morning to you, Joe. Thanks so much for joining us. So, as Tim pointed out there, you know, this sideways actions feels a little bit like the yin and the yang, push and pull. Obviously, we continue to see this rotation out of tech. What do you make of it?
QQQ holding strong.
Yeah, I think that's a good way to look at it. I think that you know, we've been talking about the 10 stocks that have been moving the market for the last couple of years, and now the other 490 are catching up a little bit. We've seen some strength in financials, materials, discretionaries.
Things are looking crazy.
It really has been a bit of a cyclical lean as of late.
Fighting and battling.
And that's why, you know, Sam, I don't worry about little pullbacks like this, especially at very, very low volume. I think if you look back at the NYSE and the NASDAQ yesterday, you're about 26% lower volume
what do you guys think
than
is
what you would see on an average
IWM
or average day. So you know these are thin markets. Things can whip around a little bit.
IWM or QQQ?
It doesn't mean that I don't expect tech or communication services or discretionaries, you know, the leaders of the last couple of years to pick back up. But
I don't want to even say one side's
winning. We're seeing kind of a healthy rotation, and that's good for the overall market.
Yeah, so trading a bit thin on the ground, no surprises there, given, of course, the shortened holiday trading week. What do you make of sort of the positioning that you've seen out there moving into 2026 with, you know, obviously the sort of deluge of information we're likely to get in the first couple of weeks of Jan?
Yeah, well, I mean, here's a perfect example. If you look at equity fund flows from the ETF side, I mean, look, in December, they're the strongest we've seen all year. So the positioning by investors is still very bullish. I look at kind of what I'm seeing on the institutional side in terms of hedging. There's very little hedging. You know, part of it I think is because it's a holiday shortened week last week and a holiday shortened week this week.
If they
so,
go
you know, they don't want
on
to
the
pay
5
for
or the 15-minute
ripping up on those option strategies. But at the same time, there's not a lot of concern. Now, you could look at that the other way and say that there's a little bit too much complacency. But I think kind of heading into the end of the year, I think people are just very comfortable with letting the market do what it's going to do. And then, you know, I wouldn't be surprised to maybe see some of that continued rotation in the beginning of January. Why? Because you might see some people that are waiting to sell some of those winners so they take advantage of, you know, an extra year in terms of the tax considerations. They might be selling out of some of those losers right now as you're seeing some of that tax harvesting strategy. That usually starts around, you know,
to be
the
fair,
26th,
brother, every day, rough day.
We're starting to see that a little bit now. But overall, you know, the big trade yesterday was the metals trade, and if you look overall at kind of at what materials have been doing, they've been very strong recently in terms of kind of their breadth. So financials, you know, metals, consumer discretionaries, those all look really strong heading into these last trading days of the year.
Yeah, and of course the stocks related to, of course, those record-breaking commodities as well have been performing very well this year too. You know, not a lot of economic data to chew on this week. We're getting little bits and bobs. It does all look somewhat better, but you know, obviously the big event for us is going to be these FOMC minutes. You know, I was just talking to Ben Emmons about this. What do you make of it? I mean, what are you going to be looking out for? Do you think it's going to move the needle as far as markets?
You know, I would say that we probably got a lot of that data from the Summary of Economic Projections, the dot plot. I think a lot of that we already saw. You remember, Sam, there was a lot of diversity in terms of expectations for 26 and 27 in that dot plot already in terms of, you know, where do they see GDP, where do they see the federal fund rates going, all over the map. I mean, literally, when you talk about a dot plot, this truly was a dot plot, almost like a you know, autumn rhythm, if you will. But at the same time, I think a lot of that's already baked in. Could there be a surprise or two? Sure. But I think for the most part, you're going to see markets kind of vacillate within tight ranges next few days.
Okay. What else sort of stands out to you as we approach the sort of home stretch, the final couple of days here, you know, as far as some of the rotation? I mean, obviously, we've been tracking some of the tech headlines as well, some interesting news out of Meta with Manus, and then also, of course, SoftBank completing this, you know, commitment with OpenAI. A lot of bits and pieces, but, you know, what do you think it's sort of telling us? I mean, obviously, we had that story yesterday about, you know, more sort of data centers. We've got the US now allowing some of the South Korean companies to go back into China as well. Is there anything that sort of stands out to you about some of those stories?
Sure. I think it says exactly what it sounds like, Sam. I think it says that there's another leg to this tech story. I think that, you know, if we were to use a baseball analogy, we're still probably in the early innings in terms of AI trade. We might be looking at maybe new players, right, in 2026. So maybe, you know, NVIDIA doesn't have the stranglehold that it does in terms of the chip markets. We start to see more and more players within that space. We've already seen, you know, Amazon and Google kind of doing what they're doing, and the hyperscalers. But I think that it broadens out a little bit more. I think that you will start to see more names come to the forefront in terms of how they're adopting the AI. And I think that's a really important story for 2026 is at some point the rubber needs to hit the road. And at some point investors are going to say, what are you doing with the spend? Is it generating revenue? Is it something that's palpable? Is it something that we can look at going forward and say, because of this, you know, this has been the increase in productivity.
Chris said is something very important.
This has meant stronger margins.
All market rally may be on short. Meaning, I'm not talking about short. I'm thinking like
seems
like
things happening like going up or down, bro. Winners and losers type of story that investors need to be a little bit more mindful of. Yeah, you raised such an interesting point. Hey, thanks so much for that. Joe Mazzola there from Charles.
The extreme 3/3, and when that shit gets reverted on, or if it does, it's like so fucking terrible. It's like they do it to the most extreme, like very fast in like 20 minutes, 30 minutes, 40 minutes, 1 hour, 2 hours, like from LOD to fucking roof, or like something like that, from HOD to floor. Like, it's unbelievable.
Kevin Green, who joins me now, and we've got a little bit more data out this morning. I saw we got some Chicago PMIs, which picked up. We got some housing data. Just run us through what you're seeing as far as some of the economic updates this morning, KG.
We have FOMC minutes coming out today.
PMIs came in a lot better than the street's expectations, coming in at 43.5. Street was looking for 39.8. Now, one thing to note, Chicago PMIs have been in contractionary territory for almost 2.5, almost 3 years now. We've only had one print in that time frame where we actually did see expansionary territory. But once again, maybe a little bit more optimism, new orders kind of ticking up here a tad bit. We also have the housing price indexes coming out. Now, that actually came in at 1.3% on a year-over-year basis. Street was looking for 1.1%, but if you look at the previous print, it was at 1.4%. So a deceleration when it comes to housing prices, that also could lead to OER within that CPI component to start to decelerate as well, which would be a huge win for the Fed in order to try to get to their 2% target in next year's cycle, if you will. But overall, the economic data that we have in the big headline today is going to be the FOMC meeting minutes. Now, we already have kind of that dot plot, but we want to get a little bit more into the weeds when it comes to the decision for the previous meeting, and what are some of the concerns, major concerns for a lot of these Fed members, and do we actually see that shifting into 2026? So that might cause a little bit of volatility when it comes to the yield complex. Obviously, we have seen yields kind of trading around this 4.1%-ish area, 4.13%-ish area here. So I think that would be the headliner for today. But Sam, we still have a low volume market in some respects, a lot of premium selling in the options front as well, and we have not been able to kind of break out of this range around the 6,900 level. So let's see how the market kind of develops here, but this is going to be the banner day when it comes to economic data for the remainder of the week.
Yeah, it certainly is going to be the one big bit of clarity, I think, at least we're going to get as we sort of see stocks in somewhat of a holding pattern as we move into 2026, particularly with respect to just a little bit more of a cleaner picture of what is happening with the economy, as you say, with inflation, with jobs, what the FOMC is thinking about right now. As you say, a low volume market, perhaps not surprising there, but I mean, just looking across the space, I mean, obviously I touched on a little bit of the FX moves, but also with regards to metals too. I mean, we are seeing a rebound this morning. What stands out?
Yeah, you are seeing a rebound. I mean, yesterday we saw, especially over the weekend, a lot of fear-mongering when it came to the metal space. And we did see a little bit of a deleveraging event yesterday, especially with silver moving to the downside so aggressively. But we are seeing a little bit of a retracement bounce today. This kind of signifies the fact that maybe we are at a topping pattern and or a situation where we consolidate and then continue to move higher here. I think because of the runs that we've had for gold, silver,
that's literally
even
when I
copper,
left at the
it's really
bottom
hard
at
to kind of call a
10:45, and
top
I said,
or
hey,
even
there's a
maybe
divergence
see
at
if
the
there's a
floor, but they can
reversal
rip it up like
on the
fucking
horizon
crazy.
here.
And I literally
And you
said
have some
3
buyers
minutes
kind of
after
stepping in.
10:45,
And I
I
think
was
this
like,
is going
hey,
to be
until the
conducive
low
for
of the
equities to move
10:45
higher as
breaks,
well, especially the
all bears,
technology
all
trade. The
puts, all
silver has
shorts are in
been
fucking
leveraged
danger,
as this
right? And they
risk-on
literally just
sentiment
did
trade
that.
over the last
They
3-4
burnt the
weeks or
fuck out of
so. And if that's
everything
going to be
that
the
went
case
high.
and it remains, then I
just
think
did
we
that.
can continue to see maybe equities moving and gaining higher, especially the technology sector, materials as well as communication services.
Yeah, and obviously you and I were talking about this sort of aggressive rotation in the commodities patch, particularly when you looked at energy rallying yesterday off the back of what was a significant pullback across the metal space. Just talk to us about what you're seeing in crude this morning. A couple of headlines, obviously, we're tracking some of the tensions in Yemen has sort of flared up. That's been a big focus. OPEC expected to stick with its output pause as well come this weekend in its meeting. So just talk us through what is sort of driving the price action right now.
Yeah, right now it's just geopolitical, risk events. They continue to escalate, and now it's escalating in the Middle East. And when you're talking about Yemen, there is obviously oil infrastructure that is there that could be impacted from some of this conflict between Saudi Arabia and others being supported within that region here. So you are seeing oil up about 0.5% in the session so far. Keep your eye out on this next level to around. I'm sorry, give me 1 second. This next level around this 50-day moving average at $58.91. So let's say $59 or so. Oil WTI has been fading the 50-day moving average pretty much every single time over the last 3 months or so. Let's see if that trend does continue. But you are seeing some optimism when it comes to the XLE. And what I think is actually very interesting is the XLE is kind of setting up for maybe a bullish 2026 here. If you're actually looking at this monthly chart, what we can actually see is a situation where we have maybe a little bit of a topping pattern. If you're looking at the candle structure, RSI hasn't fully bottomed out yet, but that MACD at the bottom here looks like it wants to cross in a bullish formation. If we get another $2, $3, $4 to the upside for XLE over the next couple of days or so, which would be a tall order. But if that does actually occur, usually after those bull crosses, we actually do see a move to the upside of at least 17%, 18%. In the XLE, and in fact, that's actually kind of on the low end here. On average, you're seeing around a 25 to 30% move over a 1-year time frame, and that kind of sets up for, once again, a little bit of bullishness when it comes to the energy sector. Not sure how that really plays out with energy potentially hitting 20%, 22% next year, and the other sectors and how they perform. Usually when energy outperforms, that doesn't really go well with the broader equity market, but something to keep on the radar here. That
I need a cycle confirmation, even if long or short.
Okay, looking at $59 on crude there as a level to keep an eye on.
Right now.
All right, so we've got a little bit of better data this morning. The big event, of course, going to be the FOMC minutes that come 2 p.m. Eastern. We're watching the commodities patch as well. As you say, a bit of a softer sort of directionless picture as far as stocks are concerned. But what are you watching? I mean, what does it tell you right now? We were talking about a sort of more rotation into a type of a defensive type play yesterday. I am seeing that utilities, industrials.
This is what I think. If there's a divergence at the floor on QQQ and SPY, if it does not be used as a setup today, it will be used as a setup going into the week. And I know we have a shortened trading holiday week or shortened trading week. I don't know what that means. I don't know how that's going to play out. But what we are doing is we are creating an IWM 1-minute gap at 11:15. So smart money saying anything above 11:15 is now in the 3/3, and this is literally in danger. In danger into tomorrow, into today, I don't fucking know. And nobody fucking knows, but it is also playing in the 3/3 in the higher time frame. All this shit is playing in the 3/3 in the bearish cycle, and all this bearish cycle is playing in the 3/3 in the bullish cycle, and all this shit is playing inside the bigger in the fucking bearish cycle. So if you understand what I'm saying here, There's a SPX 1-minute gap down below. There's a intraday 1-minute gap at 6,928. And they're building fucking liquidity like crazy at the middle. And you just heard KG say it himself, right? They're building liquidity at 690 and we're range bound, blah, 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 right? We did that shit yesterday and we're doing that shit today at the same fucking spots. This is not a coincidence. Something about to fucking happen crazy. So do realize that before it's too late.
Energy continues to catch a bid this morning. What are the charts telling you?
Shit. Time is 11:25.
Yeah, I mean,
this is what the fuck we mean by candle traders are donezo in the roaring 20s. This is 2025. Let's get with the program. This is the deductors world.
500, the daily chart. The only thing that kind of points out that maybe we have a little bit more of a pullback over the next couple of days is that CCI, which is a commodity channel index. It just basically is an RSI. It measures relative strength, but it measures it against a 14-period moving average. That actually did move below the overbought level, and that actually does usually coincide with us hitting the 20-day moving average, which is sitting at around 68.55 right now. So that could be on the horizon from a technical standpoint, but we're holding 5,900, trying to hold, I'm sorry, 6,900. We're trying to hold that as much as possible.
Why am I saying this shit? Because it took me fucking a year, or it took me some time to fucking, you know, learn the way I've been and the way I am. And thank God I learned the things I did in the time I did, but I mean, it's literally, we are at 688 on SPY, you know, 2, 3, 5 years down the road, like it's gonna be different. Like it's literally what it is, man. People do not understand, people do not appreciate, people do not think about what we're doing, how we're doing, what's going on. But I mean, I am damn glad I am able to, and I found out what is going on before it's way too fucking late. Because yeah, I mean, Mark, you're gonna be here forever, but I'm just saying, bro, I ain't gonna lie, it is how it is, dude. But what is also true is that it will always be like this, because the majority and the average and the 85% or the 90 or 75%, whatever you want to call it, right? I'm saying that's the problem. That's the percentage of people that is losing on SIBO, options trading or bonds trading or whatever it is, stock trading or whatever the hell. It's always going to be like this shit. So candle traders versus fucking deductors, man. Candle traders versus cycle traders. Candle traders versus whatever the hell you want to call it. IWM looking nice. IWM looking nice. Alright, bearishness came, bullishness is coming, or came. I don't know where it's going though. This is somewhere like 249-ish, I guess it's already at, so. It went down and then now maybe coming back to 50 cents above, but it's already there, basically.
Consolidate, try to break out, but it's a low volume environment. I don't think that you really confirm price action, Sam, until the second week of January, when really a lot of volume starts to come in, and then also leading up to that leap expiration in January. So consolidation for now, maybe a potential pullback. You need technology to really outperform in order for us to break out aggressively higher over the next couple of days.
Smack the like button,
waiting
folks.
for that second week in Jan. Obviously, the earnings will start in earnest with some of the banks.
Schmack, schmack.
Me, I'm a day trader.
Oh, sorry. Let's see if there's any live streams from the White House that's going on.
President.
Millions of Americans facing a spike in healthcare premiums as Obamacare subsidies are set to expire tomorrow. The Congress ended its 2025 session with no agreement on a possible extension. Now states are stepping in to shield citizens from soaring healthcare costs. One Wall Street Journal op-ed calling Obamacare, quote, a money pit for taxpayers, adding a new study shows extending these subsidies would be reckless. I spoke with Ohio Congressman Michael Rulli on this program yesterday. Here's what he told me about a potential congressional compromise on that.
We cannot let them win this narrative time and time again. The Republicans do the hard work. The opposition party plays with narrative. I'm okay with the 2 or 3 year subsidy, so we're able to do the hard work and actually fix it at the ground level. We're a divided conference. We're going to find out where that sweet spot. If I'm a betting man, I would say the sweet spot's going to be at 2 year subsidies. I think most of our conference is fine with the 1 year. 3 year, a lot of people are saying a bridge too far. I'm okay with that discussion on a 3 year extension of subsidies. I think 2 years is where we're going to land.
2 years. Let's bring in Montana Congressman Troy Downing. Congressman, you're on the House Financial Services Committee. I want to get your reaction to those comments from Congressman Ruley. You know, it is one thing to say that these subsidies, we can't afford them. We've got to reframe and basically redo the system. On the other hand, there's a political risk for that in a midterm year.
It's just slow shit down.
Yeah, and Cheryl, first of all, I'm a former insurance commissioner, so I used to actually regulate.
I could see them pull back to here.
I'm pretty familiar
but then I can see them bounce like crazy too.
The narrative is completely
there's
gone
a gap
off track.
down there.
Now, first of all, what everybody's talking about with these Obamacare subsidies, these were the enhanced premium tax credits that were created to deal with the Democrats passed this during COVID. So basically, this was a temporary solution during the COVID pandemic, 4 or 5 years ago. And the Democrats wrote it to expire. Now, first of all, one thing I just want to point out is that it's for a very small part of the population. Everybody sees their health premiums rise all over the place for a lot of reasons that have nothing to do with these tax credits. And when you talk about the political part of this, let's just look at the mechanics on how this works. When an insurance company, a health insurance company, they file their rates, months in advance of the open enrollment period. Those get filed with their states. They get approved by their state regulators. Then they get filed with CMS, the Center for Medicare and Medicaid Services. And then comes the open enrollment period in the fall, mid-November to mid-December for the next year's policy. So that has already happened. That's already baked in for this tiny percentage of the individual market. It has nothing to do with, small group, large group, self-pay, none of the other stuff. It's just for this small section. So now let's look what happens if, obviously these credits are going to expire. I think it's today or the next day. What happens if they expire is the rates go up. What happens if we extend them is the rates go up. But look at the scenario where some of my colleagues are talking about extending them for 1 or 2 or 3 years. What does that mechanically look like? So that creates this chaos in the system. So if they extend these premiums, then we're going to have the payers, the insurance companies, will refile a new rate. So let's say that's February or March. So those get approved. They get filed with CMS. We have another open enrollment period, March or April. And then people are going to be confused because they're going to think it affects them when it only affects this tiny percentage of the individual market. And so confusion in the marketplace. And then do you make it ex post facto? Does it go back to January 1st or does it go from there on? So there's one scenario of complete chaos in the market, or the other scenario is that you extend it for 1 or 2 or 3 years. So that has no effect on the 2026 policy year. And that comes in when it gets filed next fall. You have an open enrollment period after the election. So it has nothing to do with the elections for the 2027 policy year, in which case you'll probably see still a raise for a lot of mechanical reasons, but maybe not as big because of those tax credits just in the individual market. But you're still going to see an increase in rates because the system is broken. The system, it was designed to fail. It's failing now. It's collapsing under its own weight. Nothing has caused health insurance and health care to rise
so
more
goddamn
than the
strong, bro.
More than the Affordable Care Act. And we need to actually get back down to the drivers of this cost.
I had 7, 6, 89 puts.
I literally let it. That's a big ask here, Congressman. I'm sorry, but that is a big ask. I mean, look, I know that there's a lot of talk about reforming Obamacare and changing whether it's
I think I'm done for the day, guys. I'm up 1.4K. I'm fucking good.
You've got a short window in January. And you've
Third,
got the Democrats that are threatening to shut down the government again over this. And
I had a
you've got
good
people like
move
Jasmine
fucking
Crockett
down
saying
earlier. I let the
she's
market pop up
predicting a
into
government
955, and I had
shutdown.
another good
there
move
is
down, and I
political
left
risk in all
Tesla
of
at
this
market open.
for both sides, but really for the Republicans.
This fucking
so I
shit
understand
from
the money pit angle
10:45
that
to
the journal is
11:20.
talking
I
about.
didn't even fucking do
One
anything.
thing that
I
you
watched.
do say, and I do want to bring this up, you say
People could have
this is
easily.
a rapidly failing
I could have
system,
easily.
but I don't think that you can fix that system
but I mean,
on a legislative
I don't
calendar
do anything
when
off setup.
you've got just a
There's
few
nowhere
days
to go
when you're
to
both in
except
session
4
in
p.m.
January.
close, and then after 4
is that
p.m.
a fair
close,
assessment?
it's just something with
I
this
think
shit.
that's a fair assessment. I think that the problems that we have are systemic and huge.
Top,
I mean, we've
crazy.
created so much distance between a patient and a provider, and there's so many people in the middle, and there's so many things that are driving the costs up, which is creating this adverse selection, which is making it so that the risk is being concentrated, so the losses are higher, so the rates are going up, and that's like this death spiral we're in. But
that's what I mean by setup. Why did the fucking market pop up at 11:15? Somebody please tell me.
What I'm hoping
because of
is
fucking
we
setup,
saw in
right?
the last shutdown,
Why the fuck did the market
there.
reject that 11:20
and
SPY rejected just now? Because of setup, right? Isn't that fucking crazy? We literally said something is fucking confusing here. QQQ with Tesla or something. SPY with IWM. Clearly it was QQQ with Tesla a little bit. Tesla's still bullish. QQQ still bullish. Now we are at the 4 p.m. close down. Look where we are. This is 11:15 level. Where are we at the 11:15 levels? I said anything above the 11:15 level is now greed in the 3/3, right? And that's what the fuck I mean, because that's what setup says. That's what cycle analysis literally says on IWM. From the 4, 11 or 10:40 into 11:20, and they what? They made a 1 minute gap here and a 1 minute gap here. What does that mean? That literally means the cycle was like this,
a complicated,
right?
difficult thing, but the answer
we're gonna do some higher. I'm gonna explain something so people really understand what's going on, I guess, right? Because this is how I fucking understood it as a cycle extending. They're creating an extension cycle to go higher in the 3/3, extend in the 3/3, right? But they're leaving setups to come back to, meaning that this is extending 3/3, that they created cycle, extended 3/3 bullish cycle, is in danger because of that. What happens if they pull back? The pullback creates another cycle. 1/3, 2/3, 3/3. Using who? Everybody in the 3/3 and everybody in the 2/3 and anyone in the 1/3, right? Early adapters, I guess, people that were trying as it was going lower, which is insane because the risk is crazy and there's no cycle confirmation. They're the only ones that are being alive. And look at this shit on SPY. Right? I scalped so goddamn early, but look at this shit, right? I scalped so goddamn early, but the trap and the cycle extension is so damn strong, and the power of momentum is so damn extended and strong that when they do the pullback, like I said, right? Oh, VWAP pullback is possible. VWAP pullback is possible. It's so strong. It's so strong. That is insane. That is what we fucking mean though by setup. That is what we mean though by market extension power, can't hold it, and then when it pulls back, crazy pullback. And that is what I mean by bears are in control here on QQQ and SPY. It looks like, let's see. Wow, bearish as fuck. If VWAP flips here on the 5 and 15 minute, they want to break LOD basically, maybe, or test. It's fucking that. It's crazy. I know it sounds fucking crazy. I know it's chicken little shit, but I mean LOD divergence might not hold into tomorrow or the day after that. That might be the most safest shit actually. There's a lot of bears down there, so time is 11:40. Risk is absolute for bulls and bears, which is why I'm not doing shit, but I'm just saying they might. If the I'm literally saying if the VWAP flips on the 5 and the 15 minute, then that's not even me. That's literally the market and the candle and the setup and all that shit saying. So now it's up to the bears to push it down or not at 11:40. risk is insane. Oh my god, we're at 6,900 SPX. The chop from yesterday, repeating. Bears are crazy, right? I'm going short. I'm in for 1.6K, 1,670. $10.40. It's 6,900 exactly, almost. This is house money for me, so risk is a little bit there. But I'm doing it on the hard time frame here with the 5-minute candle. I'm wanting it to rip down. Time is 11:40. Make a bounce crazy here. There's a fuck ton of bears they trapped earlier, so go a little bit lower and then bounce is possible. VWAP is resisting or bouncing or something or gaming or there's like not a lot of setups anymore though. IWM setup already played. IWM gaps are, I mean, what did I say? IWM gaps are already gone. Now it's algo range time. Does it algo range is the question on IWM. I also think there's some big bear trap today at some point too, but I mean, I think they're gonna flush and go near LOD and at the minimum LOD test and then fucking do some shit. There's still so much time. It's midday, 12 p.m. So if this shit was 2 p.m., maybe. So fucking. I mean, it could bear trap the fuck out of people here easily. It could bear trap me right now easily. Or this is just a level that 6,900 is just a level that we were chopping at like crazy yesterday. So up, down, up, down, up, down, up, down, up, down, up, down too. So literally the level we were at, 6,900. This level is the chop level that KG's talking about. Shit, maybe we should draw a fucking box. This damn purple box coming back into play, I guess, but on SPY this time, or SPX, folks. We'll see what happens, man. 6,904, 6,902, 6,900. $11.40 created an algo range too, so it's not the most safest things going on here too, but I mean they're algo ranging right at the middle to perhaps create some sort of liquidity or create some sort of cycle here. This is not the safest shit going on, but I mean, it is going on. So this definitely ain't the safest shit going on, that's for sure. The market is cycling like crazy before anything. Break above to 1145 and then deciding what to do. I'll go range. I'll go range. Shall we do a poll? We're right at the middle. Shall we do a poll? It's right at the middle. Fuck. Yeah, I'm not gonna lie, I went mad early. Right, they did not cross down the VWAP on the 5 or the 15, but I mean, I just went anyway. So, faked out for 1 minute. Oh, yay. We had really strong bounces today, though, with the 2-hour being bearish. So maybe that's why we were bouncing so strong, because the 2-hour is so bearish and they are wanting to counter rally real quick or to reset cycles or something. But we for sure did 2 times at least. We for sure did. But yeah.
Today, Bitcoin kicks off the week at the 87,000.
Big name restaurant chains like Cava and Chipotle are investing heavily in AI as they look to cut costs after a brutal year for the stocks. Kate Rogers joins us with a look at one startup looking to revolutionize restaurants. Kate.
Professionals
hey,
love
Sarah, good morning.
volatility.
We got a front row seat to how you might see AI turning up at your favorite restaurant brands in the future. Not
liquidity.
Yet replacing workers, but speeding up their production. Hyphen, which is headquartered in San Jose, California, raised $25 million last quarter in a Series B that included $10 million from Cava and adds to prior funding from Chipotle, which has invested a total of $25 million into Hyphen to date to help scale its automated make line. The tech combines advanced robotics with AI to speed up service times and free up workers to focus on hospitality. Hyphen CEO Stephen Klein says customers likely wouldn't even notice the technology because it's conveniently hidden underneath the make line countertop.
Digital order will be placed. Basically, the bowl or the tray will be dispensed or nested onto the fill positioner, and the fill positioner is just like a robotic hand. We have a whole bunch of robotic hands in there. The thing is, news is saying that a lot of people are expecting a Santa rally right now, while it already happened. So I mean, that's not a good news. They popped it twice strong today. And then because it has near infinite degrees of freedom, it can kind of get that perfect plating or that perfect portion. So you'll see brands like Cava, they have those perfect mounds, and it's very much part of their brand.
To me, what's fascinating is to see companies who are in the same category both putting money into the tech. And I asked Klein about that, and he said it's clear that both Cava, Chipotle, and even others in the space see the challenges and bottlenecks in labor, and they're recognizing ways that AI and robotics can help to solve for them, but not replace humans, making for a better overall experience.
Right? Like, who remembers that video
guys.
we watched
It
from
also
CNBC?
Cuts down on food waste
That's
and
what
gets
they were saying,
portion
man.
sizes exact, which is really key
Before this
as
popped up.
companies, of course, are trying to kind of manage their costs in this
That's what they were saying on CNBC before this
Kate,
popped up. Not what I'm saying.
Down the street
I'm
from
just
here on
saying
Wall
what the
Street is
mainstream
Sweet
media is just
Green.
feeding
They were
fucking
closed for a
mainstream
while. They
media,
came
bro.
back.
That's what deductors fucking
it's all
do.
robots
They understand
in there. I mean,
what the
there are
fuck
people
going on
who give you,
the
salad once
want
it's
to
made.
apply
Is this similar
themselves,
to
and they're
that,
not
or
just
is
looking at
it somehow
candles. So
different?
I mean, that's literally.
It's a similar type of technology, David. I think you're referring to Sweet Green. They have these infinite kitchens. There are about 20 of them. They acquired a company called Spice that they just recently sold to Wonder that has a similar type of technology. But like you said, it's all about automating that make line. And if you look at digital sales for a company like Chipotle, digital sales made up nearly 40% of their overall food and beverage revenue last quarter. So if you can get a company like this kind of quickly making those bowls, behind the scenes and allowing for a better guest experience in the future, that's a win-win.
I think something important is happening, and I don't think it looks bullish. So we'll see.
I'm
I'm dead serious, bro. Like, I just straight up be real. Like, look at that shit. Oh my God.
Live at the CBOE, our pre-bell playbook begins there, and we'll start with this metals bounce back. You and I were talking yesterday. I mean, I think I said $200 or something for gold being down. It was crazy. It's been crazy, right? What's going on now with the metals?
Well, here's what it is, Nicole, and it's indicative of the intricate nature of the futures markets. The rumors are out there that the CME raised margin rates on futures for some of the metals, and that's what caused the sell-off. Now they're bouncing back nicely today, as you can see, but what happens is if they raise margin levels, your position that you had, it costs more to hold that. So what some people may do is add money to their account to cover the increased margin. Some decrease their positions. I think that's what you saw yesterday in the metals market. So that's just a little intricacy of what happens in the futures markets when clearinghouses raise margin requirements.
100%. You could not have said that better if it is, in fact, confirmed. Do we know if it's confirmed or that's what you've just sort of been hearing? Because I'll tell you, then I heard people talking about, is there some short covering happening? Are people just sort of, getting out of some of their positions because they're going to have some margin calls? It's very interesting. So I'm glad you brought that to us. I think that'll be a developing story in the next few days because I'm sure a lot of people were really, swung around yesterday. Let's talk about the Federal Open Market Committee minutes today. I'm a big nerd. I can't wait for it to come out at 2 o'clock. Not sure why, but I really want to see what's in it.
Remember, this is 20 days ago. Remember, the FOMC meeting was December 9th and 10th. So this is 20 days old. But if you remember that meeting, Nicole, a lot happened at that meeting. Number one, big dissenters, right? In terms of 50 basis point cut versus no cut. You had Stephen Myron, who does 50 basis points the last couple of meetings, but you had Jeffrey Schmidt, Austin Goolsbee. They also dissented for no cuts. Then you had the Fed move by 25 basis points, and we feared that there might be a hawkish cut, Jerome Powell. And though he did talk about caution with future rate cuts, he also ended quantitative tightening, and they did start repurchases of short-term treasuries. So you can make a case for a slight level of quantitative easing. Then we also got the summary of economic projections that showed upgrade in GDP forecast, lowered inflation forecast for 2025 and 26, and a neutral, unchanged unemployment
or
forecast.
red again
so
for the
pretty
day.
Solid
green, red, green,
when
red,
you
green,
think
red.
about the fight against inflation, right? So there was a lot in this meeting. He didn't talk about future cuts like he's never going to. And we're waiting for some of this economic data to catch up so we can get a clearer picture of inflation. But the inflation numbers are good. Remember, this meeting,
I love days like this. Fucking unidirectional, bro. Bullish and bearish.
Between
bullish
inflation
and,
and the labor
Who loves
markets.
days like
I think
this?
that's what you're going to see.
Anybody
play
else?
Out
I
in the
fucking
minutes.
love days
It's
like
20
this.
days old. It
shit was like
shouldn't
this yesterday.
necessarily move the markets,
like
Nicole, but it always does.
When the market deciding one direction north, one direction south, one direction north, one direction south. Like I said this shit yesterday, right? I fucking love days like this, man. I fucking live for days like this, man. I fucking hate one directional days sometimes, down or up. Like seriously.
When the time is up in May for Jay Powell.
I'd rather have these type of moves and fucking just scalp.
Hassett, the White House economic advisor.
I do so much fucking better. Dude, like these days, I swear, like I'm golden 7 out of 8 days. Like it's fucking wild. All I need is a win direction, LOD, HOD, make people hope, fucking set up, trap, whatever the fuck, like momentum, volume, like it's always.
The executive from BlackRock is another guy that's been in the discussions. He's
so
never really
slowly
risen
doing
to the
everything
top.
perfectly
it
too.
Still
like
feels like it's going to be one of the Kevins. Although Christopher Waller has an amazing career in economics and is greatly respected among economists. So if it's
like
one of
new
those
money
three,
deductors are
I
doing
think you've
fine,
got a
and it's
great
just
choice.
like people that are stuck to bull or bears, it's like going up and down, it's range bound like crazy.
That would be a little different.
It ain't never leaving 6,900,
is a
really.
Great idea in my mind.
Go a little bit higher, go a little bit lower, go a little bit higher, lower, a little bit higher, lower.
Thank you for that to Tom, who said it in my ear. You know, here's the other thing, too. Imagine he says, surprise, it's Scott Besson. No, I'm kidding. What about the housing data? Yesterday, you talked about existing home sales, and I think we saw a spike yesterday. We're expecting some more today, right?
Exactly right. Yeah. Yesterday, we got pending home sales that jumped 3.3%. Good, solid number out of pending home sales. We're supposed to. We can check and see if it came out. If we got Case-Shiller home price index, those were supposed to come out right around 9 o'clock Eastern time. We actually got those numbers. Here's the numbers from Case-Shiller. 20 city adjusted month over month up 0.4. That's better than expected. 20 city unadjusted month over month down 0.3. That's slightly better than last month. 20 city unadjusted year over year up 1.3%. That's better than consensus, but a tenth worse than last month. So the Case-Shiller number, I'd call it a mixed bag. The FHFA house price number that was supposed to come out around the same time, up 0.4 month over month, and year over year up 1.7%. So good solid numbers there. Maybe we're starting to see some turn in housing. Remember, President Trump mentioned he's going to throw everything at the housing market next year to try to get some spur in housing. Remember, we've been in a housing crisis really since the financial crisis, 2008-9. So President Trump said he's going to work on that for 2026. Maybe this is the start of something good in housing, Nicole.
Yeah, this looks, very interesting. At least it shows some action, too. Okay, Kevin Hanks, thank you for all of that. Great to see you every morning there live at the CBOE. Really glad he's there. He has his ear to the ground there.
Wow.
Nancy, good to see you. I've just realized I've spent too much time the past 2 weeks talking about Google and Amazon. I want to go to one of your picks for next year. That is Palantir. Make your case.
Oh, well, we love the name from a defense standpoint. They are the leader in AI and data with Defense Department approval and usage, and then beyond that, corporate adoption and sovereign adoption. So we think the name continues. It's one of those names, Brian, you can't justify it from a valuation standpoint, just like one of our names in our 6 for 26 Tesla, which you were just talking about. Hard to defend the valuation, but the narrative is quite compelling, and that can drive stocks for a very long time, like it did Amazon for the first 20 years of Amazon's IPO life.
So Nancy, is it more, so when you're looking at a company like Palantir, do you just suspend everything that you've learned on valuation? I mean, I've done the same too when looking at Palantir. I mean, this stock is traded at crazy multiples.
Yeah, I mean, I'm a classically trained value investor. And one of the things that you had to learn as a value investor is when to pivot. And I don't mean it's different this time or change your discipline. You just have to look at things a little bit differently when the earnings are not what they might be based on valuation or at all. In the case of Amazon, I missed the first, 20 years of IPO life for Amazon. And the stock's up 180,000% since the IPO. When was it too late to get in? I mean, we eventually did. We began to understand the world was different in many ways in terms of this is a transformative company. And that's what Palantir is. It's what a number of the names in our 6 for 26 are.
What is the better buy, Nancy, Palantir or Tesla? Or should you have both of these names in your portfolio because they're both strong AI plays?
I mean, if I had to tip the scale, I would say Tesla is probably our favorite, and that's why it's in our 6 for 26. It is the transformative AI leader. It's not just full self-driving, but it's also robotics. And even if you look beyond that in the XAI investment the company is making per shareholty approval, we think all of that is super powerful, and we'd love to get a bite at the space business when they IPO. So I think this is a company that has a vision, unlike, and it's the CEO, obviously, unlike any other company that we know.
How much of a factor on Tesla is Elon's $1 trillion pay package? I mean, how do you grade that? Because that could be, even for the world's richest person, that could be something highly motivating.
That's crazy, bro.
Well, I think he's internally motivated. If you read Walter Isaacson's biography, he said, Elon said, I'm programmed for war. And that is when he is at his best. He often teeters on the edge of disaster, pulls back just in time, and then delivers on what many thought were ridiculous promises. And sometimes they've not happened in a timely fashion, for sure. But if you look at what he is envisioning, it's not just EVs, obviously. I mean, the car numbers are disappointing, but think of Tesla's EV business to the AI portion of the business, what Apple's handset business was to services in the ecosystem. And so Apple's, had many years of underperformance in terms of delivering growth in the handset business, but they were growing the services business at a rapid pace and continue to do so. So we think he is the story. He delivered on the last sort of absurd levels of incentives for the company, and is now actually going to get paid for that. It isn't the money for him. I think it's the control.
Nancy, I think people forgot about Amazon. Underperformed this year. I wrote a story yesterday on Yahoo Finance laying out why the stock could rise 50% next year. I got a lot of, let's say, negative feedback on that. Very important. I wasn't making this call. I was just laying out the reasons why it could happen. Am I out of my mind here?
Welcome to the investment business. No, I saw it, and I do agree. I think there are a number, it's been a laggard. They delivered robust earnings. I mean, really a massive earnings beat last quarter. The AWS business is very mature, but still growing at 20%. And they offered this tidbit that I didn't see many people talk about, and that is that October growth in that business was bigger than the whole third quarter. So I wouldn't underestimate them. Trainium is at full capacity and has a backlog. And it's a stock that's trading at a peg of 1.4 times. If you go back and look at the S&P historically, it's traded at a peg of 1.5 to 2 times. So I think this company is fairly valued and has the ability to deliver not just robust earnings growth, but free cash flow is going to increase next year to levels we haven't seen in 5 years.
And Nancy, you're in good company because Warren Buffett has also liked Amazon. That brings me on to my next topic. Tomorrow is his last day as CEO. It almost is surreal to see this day finally here, but nothing lasts forever. What have you learned from Warren Buffett's investing career, and what principles have you applied to how you do business?
Candles have left the purple
Perspective, I think, Brian. I mean, I actually, little known fact, I managed a $100 million portfolio for Cologne Reinsurance, which was acquired by Buffett at Berkshire. And so for a year, they kept us on. We managed money for Warren Buffett. I think it was out of the kindness of his heart because we were new. I mean, we generated great returns for the firm, but he has a perspective and I would say that kindness matters in this business. There's a lot of people that are not humble. They don't learn from their mistakes, and they're not the kind of people you want to hang out with, as you saw as a result of the article.
Ferrucci for sure.
He has never engaged in that, and he has been steady at the helm.
He's actually a real teacher.
He has perspective, and when he pivoted to Apple, though we were already in the stock, I thought that was an important moment to pay attention to.
He's got a good culture over there.
Is that one of the best ways to become a better investor, Nancy, to learn from your mistakes? Not every investment's going to work out.
100%. I have a team of analysts. That's all I talk about with them. And some can't do it. And we had one that recently left, and that was the reason. You have to have the humility to learn from your mistakes and also admit them. If you can't admit them, then you don't learn from them. So I make a mistake every day. We have I don't know what you call it, but a watchword or a watch sentence in our firm, which is investing is about being mostly right. And if you're mostly right, you'll generate top 1% returns. And we've been able to do that over the long term. But we're not right every day.
I want to be a part of her firm.
It's a humbling business.
Indeed it is. Nancy, always good to see you. Happy holidays. Happy New Year. I look forward to talking to you again soon.
Happy holidays. Happy New Year.
You too, Brian. Thank you.
Hell yeah. I'm at $1,940 from $1,640. I'm trying to book it at 2K. It's unique.
Taking a look at futures this morning, second to last trading day of the year. We, of course, have got a flat number for the Dow right now, just going negative by 2 points. S&P and NASDAQ are slightly lower as we head into the session. Tech and AI still dominating the market discussion this year. NASDAQ rallied nearly 22% in 2025, outperforming both the Dow and the S&P 500. Global semiconductor sales topping $400 billion in 2025. Chip makers bracing for an even bigger 2026 as demand for computing power is surging. NVIDIA facing some stiff competition from Google and Amazon even after they signed that $20 billion AI deal with Grok. Analysts are warning long-term AI financing, power, and supply constraints are emerging as risks as we go into the new year. Let's bring in Piper Sandler Chief Investment Strategist Michael Kantrowitz. Michael, good morning to you. What are your thoughts on all of this as we look ahead?
Good morning. Well, I think there's a lot of reasons to still remain constructive on U.S. equities in 2026. I think we're beginning to see a sustainable budding rotation outside of just pure tech into other areas of the market, and that in 2026, positioning is going to be about the collision of the secular AI cycle colliding with a cyclical monetary and fiscal stimulus backdrop, which I think is going to be pretty good for macro. The concern next year is going to be whether or not interest rates on the long end and inflation pressures are restoked by better economic growth, and I think that's what investors are going to have to navigate.
Scared me the fuck out, but I am still
get into this. You think that we're going to have that strong growth in 2025, especially after we had that incredible GDP reading for the third quarter?
I do, and I think Michael makes a great point. I mean, the question is, you know, we have inflation running 2.5% to 3%. You've got growth running at a good clip, and I think the economy is in pretty good shape. So with regard to the long end of the market, it is questionable. I know the administration wants rates
a lot of bears
down,
at the floor,
but the dynamics don't necessarily lend to that. So we have seen this steepening, and the steepening has really come from the short end with the Fed coming down. Michael, what's your outlook for the Fed in 2026?
Yeah, I think we'll see a few more rate cuts. So I do believe that we're going to have a unique macro backdrop next year that we haven't seen since the early 90s. And we saw quite often in the 70s and 80s, is a budding cyclical recovery while we are still seeing weak employment data or a rising unemployment rate. So the combination of a softer labor market persisting into 2026, I would argue, and have been arguing, that continues to be a bullish story for equities because it keeps the long end and inflation pressures contained. It allows the Fed to cut a few more times while we are seeing areas in the economy like housing and manufacturing start to actually show some signs of healing. So I think it's a pretty good yet unique backdrop next year.
Let's talk about the Fed a little bit more, because as we close the books on this year,
look at the live stream title now.
And we take a look at the 2-year right there. Here you go. And, of course, the 10-year. You've got the Supreme Court decision on President Trump's tariff authority. And also, of course, we're watching to see who the next chairman of the Fed is going to be.
Tech, new all-time high, new year pullback.
I want to ask you about that, because certainly with companies that are
let's get some W's in chat,
basically
folks.
Have followed already suit. They want refunds on tariffs if the court throws it out. You've got that issue, and then also President Trump is putting more pressure on the Federal Reserve. He's saying he'd love to fire Jerome Powell. The question, I think, now is, does Jerome Powell quit instead of staying through 2028, as he, at this point, is scheduled to do? Michael?
I'm not concerned about Jerome Powell quitting in the near term. I mean, he's certainly made it this far. So, you know, whether or not he'll stay on the FOMC, we will see, and that'll be interesting to see how markets react to that. Yes, the new Fed chairperson is going to be able to and likely will cut rates further.
Tech pullback part 2 day today.
The long end, to me, is really going to continue to be a function of the labor market. So, we do want a strong economy with a strong labor market. I don't think that's the backdrop, but again, I think a combination of softening labor data is going to be something that has and will continue to keep long-term interest rates lower. So, I think the macro backdrop is going to play a bigger role than who's in the seat of the FOMC next year, like it's been the case, I would argue, for the last couple of years.
We lost 6,900. That's not good.
Kind of complicates, the Fed's decision making, and the outlook for next year. And there's a lot of pressure on Powell, and of course we're going to get a new Fed chair, but he's only one person. How you lead the board of governors and how you lead the committee is going to be another.
If they go
Michael,
lower,
it's great to see you. Happy New Year. Thanks for being here.
Bulls are going to get burnt off the story of Senate rally. Why? Because it has already rallied to new all-time highs.
Joining us now to discuss it all is the former CEO of Ford, CNBC contributor Mark Fields. Mark, good to have you. Haven't talked to you since the Ford announcement, and obviously what a difference a year makes in terms of the landscape here domestically for EVs. Does it make sense to you, and sort of how do you think about 26 when it comes to the domestic market?
QQQ is still down by 0.006%.
And the announcements you've seen from Ford and GM this year, and I'm sure GM's going to have some announcements probably in the first quarter or first half of next year to take some write-downs. They're starting to get realistic. They got ahead of their skis in terms of the demand.
The bull trap we did today is absolute.
On top of that, obviously, you had the changes from the administration, which took away the federal incentives,
trap
the $75 federal incentives for EVs. And so they realistically said, listen, we put in all this capacity, we're not going to be able to use it, and they're going to have to write it down.
We are
and
in
at
a
the same
downward
time,
trend
pivot back to not only ICE engines, but more importantly, hybrids, which are the better
I'm up $900 on my 1.6K.
So it's not a surprise. From my perspective,
puts,
I think on the domestic market for EVs, I mean, listen, you're going to see the fourth quarter probably come in probably
downside
about 45, 46% down from the third quarter, and probably almost down 40% from last year in the fourth quarter. So, I think for the full year here in the U.S., EVs will be down about 2 or 3%. But if you project out the fourth quarter performance, you're going to see, an EV market that's going to, particularly versus last year, continue to decline. It'll stabilize and start growing again. But the automakers have just been realistic and said, we have these stranded assets. We're going to have to write them off. We're going to have to listen to consumer preferences. And that's what I see going forward in 2026.
Yeah. Does the U.S. domestic market then become very different than the rest of the world in the sense of the rest of the world seems to be buying EVs at a greater rate? Obviously, we talked about China's ability to fulfill that demand. I'm just curious, do our companies then suffer when they're trying to sell around the rest of the world?
IWM
I think they'll suffer in terms of when you're not competing kind of at the coalface with the most competitive in terms of manufacturers of EVs, which are the Chinese, based on their cost structure, based on the electronics and the technology that they're putting into the vehicles. Over the medium to long term, you do pay a price. I mean, just think about this, David. 50, 60 years ago, when the domestic OEMs decided to leave Japan because they couldn't compete there, the Japanese made major inroads around the world. So I think it is a medium to long-term issue. But listen,
this is what I wanted, though.
In the short term, I think this is going to play to the domestic OEMs' benefit because they get to pivot back to ICE engines and hybrids, which hybrids are a better solution for consumers here in the U.S., but also around the world. And I also think you're going to see a bit of a backlash in a lot of these export markets that the Chinese are taking advantage of.
A lot of bears down here.
They're just trying to export their excess capacity right now. And at some point, those governments are going to wake up and say, this is not good for their own markets. So You know, I think it's a mixture of a lot of different things. But yes, medium to long term, the domestic OEMs, if they're not competing head on with the toughest competitors in EVs, they'll pay a price for that.
Five-minute time frame so strong on SPX. I said, hey, if they let go of the purple box, right, they're gonna go lower. And they had time is 12:15. And thank you those that have hit the like and the thumbs up on the video. There's so many people that watch that just literally 30 or 40 people that just come and go that never hit the like button. So thank you so much that constantly do hit every single day. You guys are the realest and you guys are so helpful. And those that are forgetting, please do. It does help a lot, but there's a lot of people that does do that. So I'm sorry if I'm just generalizing what is going on, but yeah, that is going on. Talking about Meta.
Joining us now is Citigroup's head of U.S. equity strategy, Scott Cronert. Scott, you guys have a pretty rosy view of the year ahead. Does this final action tell you anything?
Hey, Sarah, Happy New Year. I guess
we can say I'm not the mystery broker, otherwise I wouldn't be on here, so that's going to be very a lot of things
happen,
so you know people forget
look,
too.
What I would say, our view is that this boom versus bubble discussion keeps coming up, and we're in the boom phase, and in our view, which we think is a bit more of a glass half full approach to how we're thinking about the AI inertia in the market, much more so than bubble, which is a little bit more glass half empty the way we think about it. But to your point, in terms of the setup going into the end of this year, as always, we have to be aware that at some level we're probably paying forward for next year's fundamentals. But our view continues to be one where we're looking at an underlying fundamental setup for next year that's going to be very constructive. We've staked out the high end on sell-side consensus for earnings expectations at 320 for next year, and we actually feel quite good about that.
Right. So what's going to drive the earnings in particular versus expectations, which are already high? We know that the economy has been pretty resilient. The Fed has created an easier sort of money condition.
Who thinks IWM is going to go break LOD? I don't even know. I think it's going to test somewhere here, and then it's going to bounce maybe.
You continue to see a beat and raise
does,
out of that
if IWM goes and tests LOD,
which is very instrumental to the index level earnings progression from here. Keep in mind that part of the market's roughly 40% of the market cap, and a little bit less than that in terms of earnings growth. But in terms of that being an important driver, that is point
this is
number
the
one.
3/3 though, so until the low of the 12:15 candle breaks, all bears and all puts and all shorts are in danger here from the cycle of 11:20 into 11:15, just like how all calls were in danger from 11:15 to 11:20, right? On the SPX or on the IWM gap alone. So the cycle analysis now says that this was a 1/3, 2/3, 3/3, and then cycle analysis also states that this is now 1/3, 2/3, 3/3 from 11:20 into 11:20, 11:20 into 12:15, so 55 minutes. And I'm not saying it can't go lower into the next 5 minutes or the next whatever, but what we can say is that cycle says
Let's talk more about retail with Simeon Siegel, senior manager.
Things have happened.
Today,
now we are in some sort of a 3/3 somewhere here.
I'm
I hope the president comes on, but I don't think today.
Hey, how you doing, brother?
Have anything? Bounce coming in pretty thick though. 1220. Spike. Well,
the U.S. dollar posting its worst week since June, with Bloomberg's dollar index showing the greenback on course for its steepest yearly drop since 2017. Lots of questions around debasement. Bloomberg Skylar Montgomery Koenig joins us now. And Skylar, thank you so much for being with us. Before we get to the dollar and the path ahead, I'm curious your view on how much you consider gold and silver when discussing whether we are seeing truly a debasement trade take hold.
Yeah, I mean, I think the one place that you can see investors really pivot away from the dollar is in COFR data. So central bank reserves have pivoted away from the US dollar, but it's not landed in one currency specifically because there is no clear alternative, which is the issue. Now, I bring this up because there's also been a pivot into gold, and I think that's increased enthusiasm for assets generally that are more out of the norm. And for the dollar, it's not a big impact because it's a small flow, but for gold, it is very much a big flow relative because it's a smaller market. So I think it's you know, definitely symptomatic of that trade, but it doesn't necessarily mean that you're going to have big dollar downside because COFR reserves, the share for the dollar has been declining for something like 2 decades now. And you've had big cyclical dollar bull markets in that period. So it's a small flow for the US dollar, especially as it still dominates trade flows, it still dominates financial flows, but it's a big flow for gold.
How much is a weakening dollar a consensus trade heading into 2026?
I think it's more mixed than maybe the headline numbers tell you. What you tend to see actually is at the beginning of the year, if there's not a strong bias, you tend to have consensus go towards dollar weakness. And that's because you've had dollar overvaluation on a number of metrics for a very long time now. Now, I think the issue is those metrics is they don't take into account productivity gains. And so on that measure, you'd say valuations should have a structural break higher because the US has been more productive than a lot of its developed market peers. So I think, you know, when there isn't a clear bias, as we had at the beginning of last year, which was actually for dollar strength, you tend to see dollar weakness come out as the favored trade at the beginning of the year and year ahead.
If you don't have any clear bias, like, oh my god, kinda fucking annoying. Not gonna lie.
So we're thinking about bringing a gross incompetence, what's called gross incompetence lawsuit. It's gross incompetence against Powell, and it was his baby. And the guy's just incompetent. I mean, there's nothing you can do about it. He's just a very incompetent man, but we're going to probably bring a lawsuit against him. Thank you all very much. I appreciate it. Bibi, congratulations.
When do you expect an announcement then on Powell's replacement?
January sometime.
And will you ask Jay Powell to resign from the board entirely?
Be a favor to the nation. But he's come close. I mean, we're getting pretty close. I would fire him. I'd love to fire him, but we're so close, you know, maybe I still might.
Dang.
Joining me now with $500 million in assets under management, K-Rook's financial CIO, David Lott. All right, David, how high do you see it going?
Well, we mentioned 7,300 by the end of next year, but I don't think it's going to be a line that goes straight up. There's more optimism than there has been, which is a little ironic given how good the market has been and kind of going into a little bit more challenging time. We know that midterm election years aren't great. We see rotation happening out of the growthier areas of the market. Look at the equal weight index today outperforming both the NASDAQ and the Dow. So I don't think we're going to have a straight line up, and we're looking to rotate into some more economically sensitive sectors that might not be quite as tied to the AI trade until we get a little bit better valuation next year.
But are they tied to GDP? I mean, we've talked about Q3 GDP north of 4% and sort of an acceleration next year. So when you say economically sensitive sectors, are you betting on further growth?
Guys, 20 or 40 people,
yes,
please
absolutely.
smack the like
so
button.
We
Let's
know
push
that
it
the
up to
Mag
100.
7 has driven
Help
the
me out
market
today.
and had about 50% of the returns in the last 5 years.
I will give you
that trend probably
hugs.
Doesn't change if we have a good year next year, but I think we might get a reset. In the meantime, we're looking at financials, industrials, and energy as opportunities to continue to have growth, benefiting from falling interest rates, benefiting from a robust economy, but maybe not looking to technology as the place to start the year, and maybe looking for an opportunity to dip our toes into it, just like we did in April later next year.
My guest at the top of the hour also liked industrials. Is there a fear that everyone likes industrials, and is that a crowded trade, or am I speaking way too soon on that?
Well, it's hard to say. It's not the largest percentage of the S&P 500. So when we like it, we're not putting all of our money there. But I do think it's wise to say, hey, what are the benefits here? We've got some tax benefits from reinvesting next year for companies. That will be positive. We have some tax cuts at the corporate tax rate that could be positive for industrials. And as the infrastructure of AI is built out, those sectors will benefit. Oh, by the way, we were just listening to Trump and Benjamin Netanyahu. That's the geopolitical front. You do have some defense companies in that sector as well. And so when we look at kind of some of those geopolitical risks, there's some opportunity within industrials there too.
Energy, I only have 30 seconds. Crude's at 58. Do energy stocks outperform energy?
I believe we are looking at energy stocks as the opportunity. We like the yield that's associated with them north of 6% in the index. And we also think that that's a
Closing out 2025 with an 11th hour acquisition. Got a few of those in the tech space this week. The company announcing it is buying Manis, a startup founded in China that builds AI agents. Mackenzie Sagalos has more in today's Tech Check segment, Mac. And it's interesting to see Meta outperforming too.
Yeah, it is. Investors are bullish on this, and part of that is the fact that it's a deal that speaks directly to the pressure Meta CEO Mark Zuckerberg is facing to show returns on the company's massive AI spending, and one that straddles the increasingly complicated U.S.-China AI rivalry. So Manis had a mini viral moment back in March. The company claimed that it outperformed OpenAI's deep research. People were calling it China's next DeepSeek moment. The K-Web was running up while the Mag 7 was selling off. Now those trades have reversed. But the talent and tech that spooked investors this spring, that's now inside of a U.S. tech giant. No terms officially disclosed, but the deal reportedly values Manis at more than $2 billion, a big jump from the $500 million valuation when they raised this spring. One analyst saying this deal has the makings of a future Instagram or WhatsApp-style home run, adding that agentic AI plugs right into Meta's push to monetize SMB business tools, especially the services that it offers internationally via WhatsApp.
I'm back.
And from Silicon Valley,
all right, guys,
on why
the MACD trying to be
is
bullish
blunt.
here, but it's kind of faking the fuck out. Like, what the hell is this? MACD trying to be bullish, but the candle is like making a bull flag. But IWM weak as shit right now. This is not the best. Not the best of all things happening. Tesla is all coiling at the top. This is amazing to see, though. Didn't really run or anything like that, but yeah. Meta purchased Manus, apparently.
That Meta has no real AI products with traction. Manus, on the other hand, is a strong business. 125 million in annualized revenue by December, gaining 20% plus month over month, but struggling to grow into something that could really IPO. So
bulls are
this
coming
is Meta
from
buying one of the only
to
viable
12:30
consumer AI successes out there.
15
Meta
minutes at
says
the
Manus
minimum
will
here.
stay
Candles
standalone
are
for now, but the
dry.
product will also get woven into its products over time.
The RSI
It is
is
a
in
big
neutral
integration test for Chief AI Officer
I
Alex
think we're
Wang,
building a
coming after
huge
4
wedge in
reorgs of
Intraday.
his department
If you look
in
at this
6
on the
months,
1-minute
as
candle,
CEO Mark
Intraday
Zuckerberg
today,
races to make the
we are
spend pay
building
off.
some sort of wedge
Guys?
that we need to draw.
Yeah, and Alex, a product of a deal himself, of course. What they paid $14 billion for part of Scale AI, although that company's kind of what was left of it is sort of no longer. I mean, are there more to come here, do we think? And, you know, do we have a sense in terms of how, I mean, this company's growing so fast, Mackenzie, I do wonder the impact it could have pretty quickly.
Well, I mean, to your earlier point, you spoke to Gil Loria earlier about the fact that Meta has spent $30 billion on a mix of talent acquisitions. 14 of that, as you just noted, to bring Alex in-house. We're still waiting to see return on that, but Zuckerberg has the voting power to be able to make those kinds of decisions. So as for whether more are coming, certainly, yes. There's not been any sort of, you know, I mean, in the last week alone, we've seen 3 more deals from SoftBank, from NVIDIA, really leaning into the fact that these acqui-hires are not being checked. And so in that kind of regulatory environment, why not lean in? And at roughly $2 billion, it's not even that big a purchase. And their SMB enterprise services are
volume is slightly going more and more bullish.
That's a really
I don't want to jinx it. That's the fucking thing. Like IWM now bouncing, so man, IWM really just jumping up and down.
It increases the concentration
I don't want to
risk,
jinx
which I just keep saying.
So
but as these, you know, as the big powerful ones get even bigger, even with these smaller acquisitions in the AI space, it creates a level of vulnerability ultimately for the market if we do see unraveling, like we saw little flashes of this year.
But yeah, I did see that it's like.
And when you think about that Mag 7 contingent, you've got Elon Musk, Jensen Huang, and then, of course, Mark Zuckerberg, which are these founder-led companies where they do have the voting share to be able to make these kinds of decisions without answering to a board of directors. So certainly you are seeing some consolidation. I mean, just in the last week, as I mentioned, NVIDIA buying Grok, a smaller AI chip company that gives them a real advantage in the memory space, which has been one of the hottest performing stock sectors in 2025.
Wow. As you point out, of course, Zuckerberg, 61%, I think, of the vote. Lets him do what he wants. By the way, shareholders applauding it. I mean, the increase in market cap is some $18 billion today for $2 billion that's been spent. Mackenzie, thank you.
He owns his whole company with fucking his own probably personal. He's Batman, bro. He owns probably Facebook himself. Wow.
Director and head of machinery, engineering, and construction. Let's bring in Tammy Zakaria, executive director and head of machinery, engineering, and construction research at JP Morgan. Who would have thought machinery, engineering, and construction was the sexiest stock of 2025? Why do you think Caterpillar gained so much?
First of all, thank you for having me. We did think about it, and Caterpillar was one of our top picks for this year. And what you're really seeing is a change in narrative for Caterpillar. Historically, if you look at Caterpillar, it used to be a bellwether cyclical stock, which investors will only invest in at the start of a construction upcycle.
Like
what we've seen more recently is basically Caterpillar turning into a multi-industry company with end market exposure to data centers, to construction, to mining. And what that has done is it has reduced the earnings and sales volatility, which investors usually value, which leads a stock to have a premium valuation versus the market, which you're currently seeing right now. And we expect that to continue, and that's why we think it's still one of our top picks.
I mean, so it was a good call. I guess the question is, does it continue when the market focuses on, goes beyond the build-out of the data centers into more of the application?
So that is literally
absolutely. So if you think about Caterpillar's exposure to AI, it's not just the build-out. First of all, you need the data center campuses, right? So you build a structure, you power them, but then you need continuous power to keep it running, and it needs to be fail-safe. So you need prime power, you need backup power, and everything else that comes with it.
They literally went to every single algo range
we all
except
know
the last
that there's
one.
not enough electricity in the grid. So do you wait that long for the grid to be ready for all this power need? So what companies and hyperscalers are doing right now is they're essentially going for distributed power, meaning you make an island capacity and you basically run the campus without connecting it to the grid. And for that, you need reciprocating engines, you need turbines, and Caterpillar has all those products. So you will, beyond the initial build-out phase, you will need power to keep them running, and you will need service and maintenance for the upkeep. And so we think it's a multi-year and multi-decade trend.
All right, so speaking of power, what is the ultimate earnings power of all this power generation then for Caterpillar?
Why?
We think it's
I have no
significant.
idea.
3 months ago, we did write extensively about it. We did a TAM analysis for them, and we found that in a very conservative estimate, Caterpillar could earn about $10 of EPS over the next 3 years.
I care about what happens, how it happens, when it happens, where and why.
This does not include any benefit to the construction portfolio because you're building all those structures. It does not include any oil and gas revenue lift because all these oil and gas companies will have to pump and explore, produce more gas
and I love
to run
the setups and I love what
natural gas turbines. So we think we calculated $10, but we see a massive upside to that.
Wow. And what about capacity? Are they constrained at all?
Well, if you have been listening to them, they did host an analyst day in November, and they laid out plans for capacity expansion.
Sometimes you got to be okay with the market doing whatever they want to do up or down, creating cycles,
and latest is turbine capacity. More than doubling, and to put it in perspective, by 2030, they're saying they will have about 50 gigawatts of power capacity, which is more than half of what they, more than 2 times of what they had end of last year.
It's like
so huge capacity expansion
gift, New Year's gift.
All right, so it's not too late.
Cycles are so.
Thank you for joining us, Tammy Zakaria from JP Morgan.
5, 6 cycles we just had. Huge intraday, right? How many cycles did we have on QQQ? God knows. 1, 2, 3, 4, 5, 6 times 2. More than 6 times, probably 7 if you count the smaller ones.
Also be a decent year for private equity. Let's bring in Elizabeth Wayne. She's the founder and managing partner at Graphene Partners, and good to have you here. First of all, I want to explain kind of what you do, because it's not, you're not a private equity firm. You are investing in managers who you've sort of identified, I guess, as being able to deploy capital in a very effective way.
Yes. Well, we are private equity investors for sure. And what we've identified is a white space in the market that has not been occupied by the bigger firms, which are taking larger cap deals. But we think there's alpha to be had as there are smaller firms starting up that people are spinning out of the bigger firms for a variety of reasons. But these are people who are sector focused on middle market, lower middle market deals that there's value creation to be had and 3x or better.
Oh man, who thinks a rejection's coming here? Right. I low-key feel like a rejection's brewing.
We tend to focus obviously on the biggest private equity firms.
Flies coming here,
alternative asset management.
I want to do the last full of the day here.
But there it's been very difficult for them to invest their capital, to get the exits. What are you seeing sort of in the middle market / sort of the lower market
opinion?
Yes, so what we see with respect to private equity is you're absolutely right. The big firms have gotten bigger. In fact, when we look at the growth of the mega caps, not only are they taking most of the capital in the fundraising cycle, they have over almost 50% of the capital, but the return as they have grown has come down. So we're finding contracted returns in the mega funds of somewhere over the last 10 years. The average has been around 1.3x multiple of invested capital.
Let's do our last poll of the day, folks.
IRR. So we built Graphene to really provide an antidote or complement for sophisticated investors to find this off-market, unique, niche deal flow that can be the 3x or better. And the way that we have found that is by looking, as you say, into the middle market and to the lower middle market. This underrepresented by investors set, whereby there's low-hanging fruit sometimes when it comes to value creation. the incorporation of AI and other tools are not as prevalent there. And they're just opportunities where these managers have built up networks over time of CEOs and management teams that they can lean into to manufacture unique deal flow that isn't overbanked or isn't prevalent in the bigger
small cap private equity.
We have the low of the day at 10:45.
Where are the opportunities? What type of sectors?
We have the high of the day.
So to date, what we've seen over 1,100 teams that we're hoping that we would back them. We've backed 6. The opportunities that we have found and what we see for 2026 are industrial, so the industrial space, manufacturing, infrastructure services. We have a team that has done branded consumer. We also find that very interesting. Healthcare services is about 20% of our portfolio going forward. So what we do is really help these teams get started. I think an interesting trend that led us to this thesis was that we are today, for the first time, 50% of the private equity firms in the U.S. are over 20 years old. And for a variety of reasons, these very seasoned deal makers, i.e. deal makers with 15 to 20 years of senior deal experience, who have track records you can verify, who have sector expertise, are starting new firms. And as they start new firms, they are really, unfortunately, in a situation where the fundraising market for them is terrible. So we come in for a solution to provide them with capital. We have a team that has investing in business building expertise to help de-risk this startup. But the most important reason that we focus on this group is that first-time funds have outperformed funds 4 or later almost every vintage year for the past 25 years.
Now 3 people saying fly and 3 people says reject.
I'm looking at some of the, my GLCO screen on the Bloomberg terminal, the global commodities just ripping on the metals, gold, silver, platinum, palladium. What do we do in 26 on that kind of front there? Because that's tough comps to say the least.
Yeah, so I think on the gold, it makes me smile.
Fly,
my very
fly,
first internship with Sir John
reject.
Templeton, I was 15 years old. It was 1995, and he asked me one question: what was the intrinsic value of an ounce of gold?
Okay,
and at that time,
8 or 9
it took me all
people
summer
saying
to figure
fly
it out. I
versus
don't remember the number I gave him, but I do remember the conclusion was the central banks were all dumping gold.
We'll
and they
see.
were buying US
No more
dollars.
voting candles
Today,
are closed.
The opposite is true.
If you want to vote for the next 2 more minutes, everyone vote. If not,
US dollars.
Make your peace.
So
say your prayers.
I think gold will continue to hold these highs. There's a lot more interest in gold as a portfolio asset rather than just a hedge.
Today range bound.
You have people like Tether buying gold.
Range bound
the India pension regulator just approved for
we did the poll earlier at 10:15 and we went lower.
ETFs. And so
made a new LOD
we also
and then we made a new HOD and then we rejected and we're pulling inside the trend line. We are pulling inside the wind direction.
Collapsing anytime soon. I think this movement will be sustained.
Whoa.
And then,
what do I mean by playing in the trend line? Let's go look at SPX real quick so we can look at the higher time frame what's going on right now.
And where I think there's value to be had still in the metals space is in the PGMs. Trump has really squashed the hopes for the EV car.
Above the trend
line. What
line.
is clear is the hybrid is here to stay, and the hybrid still has a catalytic converter. But the PGMs were sort of left for dead. So this year they've started catching a bit.
We are
that's
above the trend line.
Rhodium,
that we made
and
from
I think
Friday
that continues. So I think there's
Monday.
still value to be had in PGMs.
But the thing is, there's another trend line.
Stocks, that you can express that in. We own
so
a small one in Australia.
Even if the shit goes
up,
there's another trend line. But for right now, the trend line is from Friday
within the metals complex.
Monday,
I just think you
not
have to be
last Friday.
Yeah, we see. I'm looking at the BCom index, the Bloomberg Commodities Index, has had an incredible year of 13.6% thus far. That's the best year that we've seen since. Well, basically in 22 we matched that. In 21
polls
that
closed.
was off the
You can't
charts
vote
because
anymore.
of
no voting. Let's see when
the pandemic. But Barbara Ann, do you look at the AI craze? I note, by the way, the palladium comment, and I love that because I care about the cars.
She voted
but I was
1
listening
minute
to
ago.
Paul
Wow!
and Alexis
Before
this
the candle
morning
came
talking
out, so
about
proud.
silver and copper, and I can't remember who the guest was, but
before the candle came,
saying,
wow!
Look,
Everyone voted before the candle came
to build data centers, right?
Clap
and I don't know why I hadn't thought about Dr. Copper in that sense. I always, because of when I came into this business, think about China. But do you look at the stuff you need to build these data centers, and you think there's still room to run in those commodities?
on the right side
absolutely.
of
So copper's had a great
deducting
year
history.
because of the anticipated
In this
US
cycle,
tariffs, so
that's
people
fucking
have just pulled
hilarious.
front, level
Wow, that
orders,
was
et cetera.
perfect timing.
But also
Amazing.
a lot of the mines have had disruptions due to
timing,
fatalities, which has brought supply offline. But the major thing is, globally 450 is sort of the break, 450 per pound is the break even for copper miners. And at 550, you start getting a really nice return on equity. So that incentivizes people to go out and invest in copper mines. But what it doesn't solve is that it takes 20 years to bring a copper mine to market. So where I think there's still opportunity on the copper side is in M&A, and I anticipate that will pick up. And so if you're a major and you want to accelerate your growth at this point, you're going to go out and buy smaller companies that are close to FID, so you don't have all
that was
the
crazy.
permitting risk,
Candle
right?
was green,
And
flickering,
so we have
and then
found
we just
one in
switched to
Ecuador,
SPX.
tier one
There was a
mine with a
big
20 to
ass
30
red
year,
candle out of fucking. Well, look at the purple box.
span here.
There was a
and
fucking
it
big ass
has
red
all
candle
the
fucking
capital
out
it
of
needs to
nowhere,
get
and
to
then we
FID.
switched to
It
SPY,
has
and the
no
fucking
major
candle just
off-takers
teleported in.
and no major on the share register. That's
The
why
candle
it's in
just
Solaris.
teleported in.
We think it's a beautiful
Oh man, there's a
candidate,
gap.
and even though the
SPX
price
1 minute
take
gap
over
filled.
candidate, and even though the price
All right, one has
moved
filled.
from
There's another one
330 to
down there.
11,
Let's see
it's
when
even
that
more
one fills.
attractive today than it was a year ago because the
12.35 here.
price
This
of
is
copper is
most likely
higher
the reason
and
why
because
it's
the
doing this
majors
shit.
are
There's a setup
highly
going on.
incented to go out and buy this
There's
growth.
a reason why it ran
So
up
I
at
think
12.30, and there's a
2026
reason
is
why
the
it's
year that you see a lot
rejecting.
of M&A pick up
They're
in the
building more
copper space in
liquidity,
particular.
basically. They're being like that. All right, they're building more liquidity. The confirmation rejection at 12.40 into 12.45, and the bears are fucking crazy on IWM. And this is what we mean by setup. SPX, right? IWM, everything. QQQ, Tesla, probably too. All aligned with the purple box because of the IWM 1 minute gap. This should fill too, probably. It's going to fill right now. Most likely time is 12:46. This shit's most likely going to fill right now, right here. Filled. That is how it's done, folks. That is what it's called. Smart money deductions. That is what it's called, right? Real momentums, real setups and deductions, not MACD RSI candle always. You feel me? I'm not saying 1 minute gaps on IWM or SPX or QQQ are always filling, but they for sure are setups, they for sure are traps, and they for sure are both. And it is absolutely detrimental for real traders and for real smart money deducting wannabe players to understand what's going on, what they're showing, what it is they're showing, how it is they're showing, and when, and what it could be done like that. And that's amazing.
Well, Meta Platforms has agreed to buy Manus.
Okay.
This general term
we have Tesla.
The in the fourth quarter of importance. The regular that we gathered here at Bloomberg. By Tesla's count, analysts on average expect the company to deliver over 422,000 cars in the fourth quarter,
50.
And that's actually down about 15% from the year earlier. It compares
wedge.
with the Bloomberg compiled
SPX
average
wedge.
of 445,000 vehicles, a 10% drop.
Now,
the investor relations team at Tesla has compiled the average delivery estimates for years. But until now, they haven't shared the figures on their website. Okay. The car maker on course for its second consecutive decline in annual vehicle sales, having compiled an average estimate for 1.6 million deliveries. That is down more than 8% from the year earlier period. And Tesla shares have actually plunged early in the year as the company retooled production lines at the assembly plants for the redesigned
small cycles
Model
are
Y.
happening.
The period also coincides with Elon Musk playing a role in the Trump administration.
In Doge. Tesla is up, though, about 14% year to date. Having said all that,
let's look at a bunch of artificial intelligence-related stocks as we close out. We'll call these the pick and shovel stocks. Investors seeking cutting-edge ways to play it, snapping up technology pick and shovel stocks as the massive cloud service providers pour billions into new data centers. the data storage companies dominated the S&P 500 this year. You had SanDisk shares soaring 580%. That was the best performer in the benchmark. Western Digital was in second place. Seagate Technology Holdings in fourth. And meanwhile, some of the original AI-linked power providers,
guys, let's get the like on the live stream up, hit the thumbs up on the live stream, please, so we can get the algos going.
Energy, and GE Vernova
that are trying to find the live stream and that do find the channel. And if you are a new watcher, please hit the subscribe button on the channel. What we do on this channel is best analyze the intraday stock market and find the real direction and the trend directions by analyzing the market and looking at the cycles and the time confirmations and the wind direction that it forms live, that everybody in the world also sees by just looking at the chart. So if you like that sort of stuff, that is the right place. You are at the right place. Thank you all for being here. The market is creating a cycle. Let's see if it's near the floor or the middle or the roof, right? This is what we mean by have an understanding of the pivot points, right? Have an understanding of the cycles, have an understanding of the floor and the roof, and having an understanding of what the market is showing right now. The market is showing what? We're showing the roof, we're showing the midpoint, we're showing the roof like crazy. Cycles are super tight. 12.15 was the floor. 12.35 was midpoint or above. 12.40 was the roof. I mean, not really, but you know what I mean, like in terms of the feeling wise. But I mean, let's just see. We are chopping and chopping. This is also around the time where things slow down, 1 p.m. maybe or 2, unless the president comes on and something happens with the news. But then we have 3 to 4. They're saying they're expecting oil to go lower. Damn.
Political tensions from Venezuela to Russia and Iran
prices.
Against concerns.
Does anyone else like
about
really
low
oil prices?
Out there joining us now is Regina Mayer, global head of clients and markets.
I'm just fucking speeding and using.
Regina, what are your clients down in the oil patch saying these days with WTI crude
oil? Every single
below
other
$60, they can't be too happy about that.
Like twice a week
I think
now.
They're actually planning for a lower for longer scenario, Paul, and they've baked in 60 or below into their budgets. They're hoping there's more upside. But I'm of the believer with the bulk of the analysts, EIA is even predicting $55 for Brent on average in 2026, that we do have a structural oversupply.
The electric
situation.
SUVs are actually probably,
November,
I want a Tesla now.
$1.5 million
Yeah, I never wanted a Tesla, but like, damn.
It's now 2 million
more and more time passes.
With the potential
2 or 3 years later, 5 years later,
barrels per day excess in 2026.
I'm going to be a Tesla driver, bro.
Oversupply,
oh, God.
some might call it.
Oh, God, I'm saying it. Oh, God.
Higher crude prices throughout 2026.
Regina, you know, it's interesting. When we talk about energy, I used to only think of oil, but now because of the AI push and data centers, I think of electricity, I think of natural gas, and the prices of those things are all
in my house
soaring,
right now,
or at least moving substantially higher. Why isn't oil doing the same? Why is oil sort of stuck in the doldrums
IWM is really, really nasty today.
Because I think it goes back to what is this overall supply picture
coiling
look like?
Coiling, just like yesterday, but yesterday was more range.
This is so 2026 outlooks, natural gas prices and electricity prices, which gets to the points that you were just raising there. So Henry Hub's been trading at about $4.30 per MMBTU. It was down at $2. So, you know, we're talking about a pretty significant increase. And I've talked to some analysts that say it could get as high as $5, $6, $7
stuck until when?
Part of that is we need more natural gas for electricity generation. We've had 3% increase in electricity generation last year alone. And we've seen electric prices raise
How much is a Tesla? Like 30?
National average in 2025.
40?
As high as 20% in some states.
Is that like 10 more extra?
As high as 4%, another increase of 4% in 2026.
A shitty Hyundai?
That's hitting people in the pocketbook. So while prices at the pump are nice, they're 20 cents lower.
Teslas are like 25 more.
Year, We're seeing a lot of upward pressure on natural gas prices, which is for home heating as well, and electricity generation, and that'll affect consumers.
Oh, well. Well, well, well. So frozen.
We talked about Hamas and we talked about disarmament, and they're going to be given a very short period of time to disarm, and we'll see how that works out. Steve Witkoff and Jared Kushner will be in charge of that from our side, but if they don't disarm as they agreed to do, they agreed to it, and then they'll be held to pay for them, and we don't want that. We're not looking for that, but they have to disarm within a fairly short period of time.
President Trump speaking shortly after his meeting with Israeli Prime Minister Benjamin Netanyahu, pushing Hamas to disarm and begin phase 2 of the Gaza peace plan. That includes a complete disarmament and surrendering of weapons, handing over Gaza to independent technocrats, and establishing a board of peace to oversee post-war reconstruction. Now, this comes as Iran's president declared the country is in a, quote, full-scale war with the U.S., Israel, and Europe as protests break out over a drop in the country's currency and the resignation of its central bank governor. Joining me now, Heritage Foundation and Heritage Action President Kevin Roberts. Kevin, good morning. Your reaction to this?
What are they talking about?
Well, I tell you, while my reaction is done, clarity.
She announced 98 individuals so far have been charged, 85 of those of Somali descent, more than 60 found guilty in court, also denying all of.
Bro. What the This title is so dumb, misleading. I don't even know how it has 5,000 views. It's fucking dumb, misleading.
We cannot let them win this narrative time and time again. The Republicans do the hard work. The opposition party plays with narrative.
Shit.
I'm okay with the 2 or 3 year subsidy, so we're able to do the hard work and actually fix it at the ground level. We're a divided conference. We're going to find out where that sweet spot. If I'm a betting man, I would say the sweet spot's going to be at 2 year subsidies. I think most of our conference is fine with the 1 year. 3 year, a lot of people are saying a bridge too far. I'm okay with that discussion on a 3 year extension of subsidies. I think 2 years where we're going to land.
Man, my market update video on Tesla,
Congressman
bro.
Michael ruling with me
God.
yesterday on Obamacare premiums.
Who watched the market update video?
Are facing a spike in healthcare premiums.
Who watched the market update video on Tesla, man?
Congress ended
Somebody
its
please tell me they
2025
watched the
session
market
with no
update
agreement
video
on a
on
possible
Tesla.
extension. And now states are stepping in to shield citizens from soaring healthcare
SPX
costs.
is at 6,000.
One Wall Street Journal op-ed calls Obamacare, quote, a money pit for taxpayers.
Bulls are
Adding
trying,
a new
but let's
study
see if
shows
it breaks
extending
out on the
subsidies
5,
would
15-minute
be
candle.
reckless. I want to bring in Nebraska Congressman and Republican Main Street
What we
Caucus
really
Chairman
need to see
Michael
is the
Flood.
5 or the 15-minute
your
candle just
reaction,
break out and go.
Wall Street
That's
Journal
what
points
it
out
really says
that
is
just in
bullish.
2024,
With
this is
the
a fair
MACD volume
assessment,
like here.
the federal government paid nearly 80% of the
here.
premiums for these subsidized plans. It was only 30% in 2014.
Not like this.
That just shows you the
Not like
escalation
this.
in the money pit, they call it, of these
Not
Obamacare
like this.
subsidies. What do we do? And also, would you be willing to extend the subsidies for a year to maybe fix the problem of Obamacare?
Well, let's start with this. You know, what did the House pass before we left for Christmas? We passed a package of bills that, if enacted by the Senate, premiums would see an 11% decrease for everybody.
That's amazing.
Now,
Choa said I did.
You
Yeah, if you guys did not watch the market update video, still go watch the market update video.
And that's about 24 million
Should have
people.
yesterday, but honestly, thank you, man.
People, according to the GAO data, 12 million didn't file a claim last year, and it's thought that there's probably up to 50% of these insureds are fraudulent.
It's been crazy Monday.
That's
it's been
unacceptable.
Tuesday.
We've got people in some situations that are making over 300,000 that are getting a health care subsidy. Listen,
Obamacare subsidies expire
the people that are just like a year away from retirement, that have already from 65 and they're retired. But to your point, I have been advocating for an extension to the ACA tax credits as long as it's paired with reforms to ensure that these subsidies are narrowly applied to our most vulnerable Americans and not rife with fraud, abuse, waste. And the other thing I'd say is anything the House does when we get back is performative. The Senate has clearly drawn a line. There's not 60 votes to extend the ACA tax credits over in the upper chamber.
Yeah, no, I had Congressman Byron Donalds on with me on Sunday Morning Futures. Listen to what he said and kind of where his line of thinking is going as we move forward on the Obamacare issue. Watch this.
Bears are coming. 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 Bears are coming.
Floridians, unaffordable
wow.
for every American.
Top of the 6904 box again. Bears are coming. If this shit goes in the 5-minute candle again, it's another trend. I literally said, watch the 5-minute candle, right?
Companies. The subsidies go directly to the health insurance companies, and then they create all of these mandates and this regulatory leviathan that only increases the cost of health care and health insurance. Let's revamp the entire regulatory framework of the Affordable Care Act. The whole thing that's in it needs to go. The subsidies that go to health insurance companies, those need to go into HSA accounts for the American people. So the American people can use those dollars to purchase health care as opposed to going in direct subsidies. But before you start talking about subsidies, we have to fix the underlying problem. It's a problem created by Democrats. Now they're trying to campaign as they're the saviors of it. But subsidies by themselves are not going to solve this problem. Subsidies by themselves are only going to further increase the cost of care, because every time the government subsidizes something, it gets more expensive, not less. So we have to fix it now, and it's on Republicans to do that.
Crazy.
You know, and those are powerful words coming from him, simply because Florida.
Bears are fucking crazy today.
With the expiration
what do we say on
of
QQQ?
these
The realist
subsidies. He's also running for governor in Florida, so he's got, skin in the game
who
here
remembers me
for
saying
several reasons.
Every single time QQQ
so
going green,
is
it rejecting somehow, right? Who remembers AI?
You don't have the power to do that for the month of January.
Well, let's talk about what this is. This is like legislative brain surgery. This is
12:30. Now we are below the 4 p.m. close. That is called setup.
We didn't get into this overnight, and we're not going to get out of it in 30 days. And so, to your point, we have to make some decisions before January 30th, and those decisions have to be bipartisan because we need 60 votes in the Senate. And so, I am of the opinion that we're going to have probably a pretty furiously wild January trying to navigate this.
There's a lot of
There's
things
no
that,
doubt this is going to be
a
on the table.
lot of things that build up to make
extending these on a short-term basis as long as we deal with
build environments is why people need to try their best and just do their best and learn every single day and learn, and then they might see some shit horizontal sloping we are at right now. But I mean, literally,
they're going to shut the government down.
It's very hard for people to just try one day out of 30 days and then try that 4 times out of the year and be like,
is moving in the right direction next year, but
now?
not going to get as much relief from the affordability crisis. I know this is a political hot button for both parties.
It has been like that, I guess,
mortgage rate right now is at 6.18%, a little bit lower. House Financial Services recently advanced the bipartisan housing for the 21st century.
At the end of the day, no matter what I do, no matter what I say, no matter how I am, and no matter what I do, most of the people are candle traders are going to be, and they do not.
And this act contains 5-year bills. So where is this going?
I'm not saying the people in my channel.
First of all, thank you for bringing this up. This is what we should be celebrating in Washington.
Like, people understand when I say shit I'm saying. Like, this is the reason why, right? My channel was at 160 or 180 80 views and like whatever the hell, and 60 or 70 or 80 people gone. Because this is just how it is. Like, you understand, truly understand when I say, like,
at the same time,
people that are here, people that are doing their thing, people that are doing whatever
chambers are ready to go on a bipartisan way forward.
People that are,
this is the way Congress is supposed to work.
Really, or
and
people
by the
that
way,
are here and
we
there
did this the
are
right
the
way.
ones that
From
are
the very beginning. I worked with my counterpart from Missouri, Mr. Cleaver, and we
DMing me and saying all the weird things that I get. They're wanting the most.
It will make it much easier for cities, Habitat for Humanity,
when I say the things I say, I clearly don't mean it to
housing
the people
agencies
that are
to leverage federal funding without having to spend
putting
more
their
just to use
darnest
it in the
effort,
and so
their
we're going
mostest
in a very good
effort, and their
direction.
time into clearly we are here every day, right?
Looking
but it's
forward
just,
to it.
I'm talking
Housing
about
is
those
one of
that
the
are,
two issues when it comes to affordability, housing and healthcare. We've covered
I don't
both
know. I call it
topics,
channel
with you,
hoppers, but like,
Congressman,
you know,
morning.
people
Real
think
quick
they
before
can
you
just
go, I do
make
want
up
to ask you
stories
about
and be
this.
like,
The
oh,
president is touting the tariff
like,
agenda.
I don't even know
as
what
his
it is.
first year back in office is
I'm on
now
a
drawing
vacation
to
to
a close.
India.
Bank of
Like, I
America
haven't watched your shit
CEO Brian
in
Moynihan
months or
says he
weeks,
expects
but
that the
like,
president's tariffs
can I get
and
an
overall
invite back?
trade tensions
Since
are
I
all
saw
going
that you
to
removed me.
de-escalate
It's like, dude,
in the new year.
there are
He
other
is predicting
communities,
a
and I know you
15%
are,
average duty on most countries.
that you
He
think
says
this
that
is just
China and North
some
American trade partners are special
sort of
cases.
shit where
But
it's
I want
like
to get
same
your
as
outlook
everywhere else, right?
on
But it's
this,
not. At the
because,
end
you
of
know,
the day,
one of the problems
I strive to not be
and one
like
of the
that, and I say
solutions
that
that
every
I've heard
day.
that I
And
think
I
is
guess like it's
interesting
just like a
is
miscommunication or
don't
whatever
tariff
that you
anything
just
that we
didn't
cannot
understand. But
make
like,
in
I
the
mean, dude,
United
I
States
literally
on
said
a
it
broad
so straight
scale,
up and nice.
whether that is
in
food,
text.
something that we cannot grow
And
here,
those are
or
things that
something that we
people just
cannot
take for granted and
produce.
people don't
What
care
is your
because
outlook for this?
they don't want to waste time and they just
Well,
want
first
things
of
that
all,
are good.
American business
They don't want to
people
put too much
crave
time and they don't want to put
want
too much
and are
effort
seeking
and care
certainty,
into anything.
predictability, and I think
Which
for
I
the first time
understand.
since he
I
left
guess we're all
office, we
humans.
actually have a
We're all,
president that's
we all wanna
negotiating
do
trade
things the
deals.
easy way,
President
but
Biden, Kamala Harris, they didn't
what I
touch
can
it. They
say
didn't do anything. They didn't
is
act. They didn't engage.
that is something that
and
I've
as a result, we saw a
strived
huge
and
ag
stayed
trade
away
deficit.
from
Now
for a
we need
long,
countries like China to make good on their promises, like buying
time.
the $12 billion of 12 billion
more than a year
bushels of
or two
soybeans that
by
they
now.
have coming.
So yeah, I stay
what
away
would
from
help here?
things like that.
Year-round
Big time.
E15 would help the farmers.
I actually want to go
Securing a
towards
farm bill.
things that I fear,
We've already got
and
more
I want to
market
go
access
towards
for
things
ag
that
products.
I want to learn. I actually go towards things that I find and I struggled with and I want to do better with.
Ambassador to NATO Matthew Whitaker joins us this morning. Mr. Ambassador, thank you for joining us. Let's pick it up.
Zelensky says Putin doesn't fucking want peace, and then it says final phase of the war. Like, shut the it's bullshit. Wow, IWM broke down the wedge, tried, and then faked out that and came back to the top. It's not bullish, it's not bearish, but Tesla is going lower while doing that. So, something else going on maybe. It's chopping at the 4 p.m. close. Back at it again, QQQ.
But now to get some insights on the news that are shaping these markets, and for that we have a special guest joining us in studio today, John Nargerian, the co-owner of Market Rebellion. Thank you so much for joining us and taking time out of a very busy holiday couple of weeks, as I know there's a lot going on right now.
I'm going to the bathroom.
Wanted to get your takeaways on really what stood out to you in 2025, especially in these latter parts of this year.
Resilience. Resilience is what I'd say, because obviously in April, people were pulling their hair out, which is why mine looks like this. But then after the tariff tantrum, we started to see the stocks come roaring back. Investors definitely were buying the dip. They bought it in big numbers back in April. And those that did, of course, had a phenomenal year. If you just held on from the beginning of the year to the end of the year, it was a good year. But if you bought that dip, it was a great year. So I'd say resilience would be, if I just had to put it in one word, it would be resilience.
And resilience across the board. I mean, U.S. consumer has also been, I think, a theme that has shown surprising resiliency for some of the economic conditions that we've been working through. But recently, what's come into play has been all things metals. And so wanted to get your thoughts. I mean, like silver hit record highs. We saw a pullback yesterday substantially. But overall, I mean, what has been, in your opinion, the driving catalyst of some of the metals outperformance?
Silver in particular, because it is an industrial metal. Silver is used in solar. It's used in data centers, in chips and so forth. Super high-end things, yes, they do use gold as well. But silver has moved up double the performance of gold this year. Up, I think, 140%, a phenomenal year. Best since '78, when the Hunt brothers were basically trying to manipulate
Guys, look at
the
this.
market,
They're breaking out,
allegedly.
faking out.
But
They're
that's
faking
what they were
down,
accused
breaking
of.
down.
And this
They're
is
breaking
not
out, faking
manipulation.
out the
This
wedge on
is,
IWM. Something
use
nasty's
and,
happening here.
Supply and demand.
I don't know if I can trust it.
You know, when you've got more demand than you have supply,
I
prices
don't
go
trust
up.
it going up or
doesn't
down.
matter what that particular
They're
asset
faking
class
both.
is. And I thought this was interesting. Silver is now the
Time is
third
1 p.m.,
biggest
so I mean,
asset
maybe we do
class
get a
in the
breakout,
world.
but this is about
Silver
the
is.
time. Perfect
The
time.
biggest, of course, is NVIDIA. But then, you know, when you round out the top 10, you've got the likes of Google and Apple and Meta and all these other companies, including Bitcoin, by the way, as far as an individual
Things
asset.
are
But
definitely
silver,
starting to get nasty
be a
for all
top
sides,
3
basically.
asset in the
They're
whole
trapping
world
the bears.
is pretty amazing.
They could trap the
and
bulls
that's
later, but like
the
this is
performance that silver has put up
dangerous.
this year, and I think people will continue to flood into that metal, whether we call it a precious metal, I do, or whether or not it's just, you know, gold and platinum and this and that. Yeah, those are big numbers attached to gold at $4,300, $4,400 to the ounce. But silver, on the move that it's made this year from under 30 all the way through 66 or whatever, I mean, just phenomenal moves. And now a recovery today after that brutal day that it had yesterday.
So when we talk about the metal space, I've heard a lot of different opinions, really, about what's driven some of this. And I think that you make a great point. I mean, it's all things tied to AI and data centers and the mass capacity that's going to be needed to continue to build. But also, year-end liquidity was relatively thin. So do you think that's
Can you believe it? Like they
contributing
bear
factor
trapped
to
using IWM after they
I mean,
bull
the
trapped, and
crazy
then now
performance we've seen.
trying to go north. But I
Again,
mean, they could bull
supply
trap
and
this shit
demand,
later. That's the
so
thing. They could
if
chop
you
it
have
here
more demand
and then
you've
play cycle
got
in
light
time and
liquidity
chop
going
around
into the
all
end of
these
the year,
algo ranges until
whoever
2,
has big gains in silver, do they want to take
3,
them now,
and
or
then
would they
decide
rather
what to
push
do
that off
when
until next
options
year,
are almost
which would
all
mean, of
burnt and
course, they
dead
don't
too
have
on
to pay
all sides.
taxes until 2027.
There's a lot of
So I
calls
think
expiring above
liquidity issues hit both stocks and
688.
precious
There's a
metals
lot
or
of puts
futures
expiring
this time
below
of year.
686.
And I would think that a lot of people would be focused in on
I'm
the
going to send
things
the
that,
SPX
silver
put to call
contributes
ratio
to, like I
when
say,
I can
solar,
right now.
because you named
Let's
data
get the
centers.
like
You're
button on the
absolutely right.
live
Data
stream
centers
up.
are huge.
Thank
but
you so
what
much. We
powers
are
data
surpassing
centers?
100.
Well,
I am sending the
obviously,
SPX
natural
put to
gas,
call ratio right now in the group chat.
solar, which is a
I
big part
will
of the demand
draw
for
it
silver this
on
year.
our
Nuclear,
SPX
coal
chart.
and so forth. So
Aligning.
silver is a really valuable material right now, and
With
it's
the
not
SPX
just
put to call ratio.
the so-called rare earth
on our XPX
minerals
chart
and things like that, or rare earth metals
1 minute.
like lithium and cobalt and all the rest, nickel and
This is the
so
SPX
forth.
put to
It
call
is
ratio
silver,
right now.
and silver is where people.
I sent it in the
I
group
think
chat.
just a week or 10 days ago, there was a stock that went up
There's a
almost
lot of calls
100%
from
in a
6922,
single day, and it was a $1 billion
6,900.
company. It went up so big because they found a
6,905.
bigger vein of the metal
box.
underground than they thought. And as they started to explore what that would mean for the value of that company,
There's
the
another
stock
red
doubled.
box.
So silver is going to
From
remain a very precious asset in
6,895.
anybody's portfolio. Unusual option activity. We've seen it across the board in SLV, in Pan American Silver,
6,900
PAAS.
to
So whether it's an ETF that carries silver in it or whether
880.
it's individual stocks, people want to have this in their portfolio right now.
And that exposure, I mean, to such a significant outperformance, even as we've seen, I mean, some areas of weakness, like in tech, for example. But you mentioned the theme of resiliency. I'm going back to that with everything we saw from the consumer this year. So what stuck out to you really as far as like consumer discretionary spend?
IWM breaking out,
I
trying.
think that has been something that has been rotational, yes, but I mean, fairly strong throughout last year and, of course, this year.
I think a lot of stories were written and or talked about on streaming media or television about the consumer and, oh, they're so strapped. You know, when you look at, there's only maybe 5% of vehicles are electric right now in our country. most vehicles are running on diesel or gasoline. And the prices for that input went down significantly. So that hits the consumer in a good way because, you know, with 33 states, I think, right now, below $3 a gallon, it's dramatically cheaper. And if you're buying 600 gallons is what the average American buys every year in terms of per car.
We're barely in positive gamma territory here.
Of gasoline. So if it goes down a buck,
6,902.
That's an extra $600
Sorry,
in people's pockets.
6,902. Yeah, so that's
again, that
SPX is
600
basically the
gallons
neutral
is
point.
average. If you drive more than that, because you live further out in the suburbs or your job requires you to travel a lot, you're saving even more. So I think the consumer spend is not as surprising to me anyway when you've got inputs going down like that. Inflation pressures are significantly lower than they were 2 years ago or even 12 months ago. So I think the consumer spend is not as surprising to me as it is to some. I think it'll continue to be strong. And I think, unfortunately, though, a lot of consumers have cut back from certain retail outlets and gravitated more towards others. It's been great for Walmart. It's been great for Kohl's. It's been great for TJ Maxx.
Dollar General.
Dollar General, yep. All of those have benefited from the consumer being smarter.
I see a small cycle data burn chop.
I
is
totally
what I said
agree
in the
with that
WhatsApp group.
reallocation of spend. Like, it's not like we're seeing a significant pullback in spend by any means, because I mean, all these companies and their recent earnings really have illustrated this. But before we let you go, wanted to get your thoughts on some of the weakness we've seen though in tech, because that's also been driving these AI bubble fears. I mean, what are your thoughts there?
Well, Michael Burry was, of course, very prescient in The Big Short, which Andrew Ross Sorkin did such a great job with his version prior to the Michael Lewis version of The Big Short, when they were talking about bubbles and things like that. Well, Michael Burry said AI seems like a bubble to him. He called out Palantir and NVIDIA in particular. He was early, but it ended up playing out pretty well, and a lot of smart people paying attention to the good doctor said, maybe it is time for me to lighten up. And so they did. And that caused that waterfall effect. When people are all running to one side of the boat can tip over. It didn't tip over, but it certainly tipped pretty far. And I think when you look at Oracle, which was up and briefly made Larry Ellison the richest man in the world, it was up 35% right after their August earnings report. Then a little more reality and perhaps logic set in as far as how long will it take Oracle to recognize all of the backlog of business that
blowing
they
up.
have? Years. So are we pricing it as if those years have already passed? In many cases, people said yes. So Oracle, NVIDIA, Palantir, many of them, even though they're great companies, I wouldn't short them. I would trade them from the short side using puts occasionally, but I think those are all going to be building blocks for the future. So I'm somebody that loves Micron, I love AMD, and of course those three that I've already named, but I don't want to forget about Meta and Microsoft, because those two are basically